All right, everything looking good. We are live. Let's go ahead and get this party started. Lots of exciting price action to look at. Obviously, had a nice crypto weekend. All right, welcome back to the channel. Crypto Trend Trader with our Sunday evening market look ahead. It is 8 p.m. Eastern Standard Time on 7/17/2022. Before we get started, like always, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. What's going on, Hunkiness? Good to see you. All right, so let's just jump right in and take a look. Obviously, where we finished up on Friday with our afternoon stream or morning into afternoon stream, there's only a couple hours left in the day after that. So not a lot of changes. Obviously, we saw the finish of the day and week. So for the 10-year, we are officially still below the 8 and the 21 on the daily, towards the bottom of the range. Looks like it's trying to push back to the upside, but I think there's a little more sideways, possibly like short-term down. The most important thing is just watching the most recent like swing low to see do we take that out. When we look at this on the weekly though, we see even though we had the hard sell signal and left the bullish control zone, we're basically just going sideways while the indicator oscillators trend down. Looks to me like a bullish reset off of some bearish divergence taking place on the weekly. We're still well above the 200 exponential and simple. They're all the way down at like 1.7 and 1.8. So not really worth looking at right now. But obviously the thing needs to cool off a little bit as it was getting a little bit overheated. When we switch out to the monthly though, we see the most important thing is we have basically recaptured the 200 exponential and simple. The 200 exponential has flipped bullish. 200 simple is still bearish for now, but basically flat. And so the main area to watch essentially is just staying above like 265 to 275. And we know obviously right now we're basically at that 1.75 level on the Fed funds rate, and we're expecting 75 basis point hike, which would take us up to like 2.5. So, if we get a 100 basis point hike, all of a sudden we're at 2.75, and the Fed funds rate overnight, obviously should be lower than the TNX, like 10-year Treasury yield would be. So we would expect the yield would need to catch up. Even a 25 basis point difference is below the normal amount. So while we're up in the bullish control zone, we have just recaptured key moving averages. Everything is bullish on the monthly for now, but the shorter time frames are showing that we could see a little bit of cooling. We know just the key level to watch out for, and what we need to see as support is, well, the longer we spend above the 200 exponential and simple moving average, the more bullish the case is. So all we have to do is just go sideways, and it's bullish to me. And we haven't been above those levels for, more than basically this 1 to 2 month period right here since the 1980s. So we're talking about doing things right now. We're already doing things that we have not done in 40 years. So essentially what it comes down to, this could be the beginning of, a multi-year or decade trend. Last thing I'm trying to do is fade rates right now. You had 40 years to bet on bonds or bet against rates. I think, obviously give favor to the predominant trend, which is, rates going down. But once an asset meets zero, it's like, are you going to short something that went down from $100 to a penny? Once it's a penny, are you going to short it for that last penny gain? No, that's just greedy. And that's how I look at the bond market right now. So TLT, obviously we're back testing those key resistances. We broke through them. As long as we can't recapture those levels, there's no way we're going to hit the potential target of like 130. But we're at that area that it's worth watching what happens. So we saw the VIX closed out very bearish on that daily, and obviously the end of the week as well. But we're essentially just at support. Each time we've come down to this level, whether it's the bottom of the white channel, whether it's the, I'm going to turn off the drawing tools, whether it's the 200 exponential and simple, either way, no matter how we look at it, or this triangle, we bounce this bottom area for support. So obviously our bias is always that the trend or the pattern will continue until the one time it breaks. So we should obviously be buying support or selling resistance. So same reason we called the top up here. We would expect this to be the bottom or right around the bottom. Now, obviously, we could get a day down here. We could get a wick down, etc. But we would expect this area to hold as support. telling us that the volatility is likely about to pick back up in the markets. So we're likely to see the opposite of what we've been seeing, which is what? Well, when we look at the markets, it's very clear that they've just been kind of like floating sideways to like slightly up. So if the volatility is about to pick back up and this is going to shoot back up from that 24 level to around that 34 level, that's essentially all the VIX represents is the put call ratio, or like the amount of people buying puts versus buying calls for, in this case, the S&P 500. So if everyone is buying calls, that means the volatility index is going to get an extremely low read. And historically around a 20 is like our average. And if everybody's buying, puts and only a couple of people are buying calls, the VIX shoots through the roof because everybody's expecting more downside. So the volatility is extremely high. A normal market operates around 20 VIX with, essentially a pretty low volatility because people aren't necessarily hedging. They're just assuming over time the market will continue to just sort of float up and to the right. Now, that being said, once we see elevated or unstable periods or long periods of time where we have elevated VIX or short periods of time with massive spikes, those are the best opportunities, obviously, but you have to be ahead of them. So that's what we're looking for, essentially is that big break in one direction or the other. Obviously, a big break to the upside will probably say the bottom of the markets. Now, I don't think we're close to that right now, but also, I don't necessarily think we're going to break this. I think we're more likely to just have, what amounts to a move in the VIX from 24 up to 34. We're talking about like a 40% move in the VIX, which is a huge deal. And we could see serious volatility in the markets corresponding with that. So that being said, VIX looks like we're at support for now. So US oil, we got the move all the way to the bottom of the range. We came down, we put in a new low based on the wicks, but we got bought up fairly aggressively off the 200 exponential and simple. We hit our target exactly where we were expecting off of the rejection. Came down to the bottom of the range, came back up to the heart line as we expected, got rejected again, came all the way back down and put in a new low. So what do we know right now? Well, we know, again, sticking with that same theory, we would assume that support would hold. So oil would find a base right here and then just chop around sideways or try to move back up to the top of the range, probably just put in another lower high. Now, that being said, the most likely scenario prior to a break of a range is you come down, you test the bottom of the range, you retest the heart line, and then you retest the range again and put in a new low. Or if you were going up to the top of the range, it would be put in a new high. So that being said, if we're going to see a break, we have the perfect setup for it. We came all the way from the top after a lower high to the bottom. We back tested the top of the channel, found support at the heart line, lower high, came all the way down to the bottom of the channel, back tested the heart line, found resistance, came all the way down to a new low. So this is the perfect setup for a break of the channel to the downside. Now, that being said, we normally give priority to the channel and assume it's not going to break. So that puts us around essentially a coin toss. So the question is, you want to coin toss a short into oil off of support of the 200 exponential, simple moving average, and the bottom of the channel. I don't really like that setup. I don't like to buy, resistance or sell support. I do literally do the opposite. So it's me like trading against my strategy when I do that. That being said, we have a nice setup for a potential break. So obviously we already took profits on, oil stocks, etc., energy through the top of the range here. This looks to me like distribution, which is what we've been doing. So it makes sense if we do get a break from this area. But I could easily see this pattern just floating sideways for literally months and months and months. So that being said, if we switch over to our weekly real quick, we can see basically what's happened is we had a massive run up. We reclaimed the 200 exponential and simple way back here in January 2021. Kathy Wood was calling for $6 barrels of oil. Obviously, we were calling for $114 barrels of oil. I guess we were right by a little bit as we basically topped up here almost perfectly at 114. Since then, we have basically been going sideways in this channel right here. And now we have bearish divergence on the weekly on both indicator oscillators here, the Jewel Thief and the TJD TDMACD. We saw previously multiple drives of bearish divergence that didn't play out. So now are we going to see this one play out and be the big one? I mean, I don't know. I don't know what's going to happen. It seems likely now, though, that we've lost this ascending resistance. Once we lost that level, we came down, tested the bottom of the channel. Would not surprise me at all that we break down. And even though we break through this channel, and the pattern fails, which is okay, eventually it's going to happen. But even though, probability tells us it trades sideways in this range, well, we have another more, longer, more important range that's been taking place for literally months and months and months. since January of 2021, when we started, or March of 2021, we started mapping this out and got this ascending broadening wedge. So we broke out to the upside. We couldn't make it any higher, couldn't hold support. So now we're coming back down to the bottom of the range. So maybe we do get that break and we backtest 83. Seems likely. Also, the measure move would take us down potentially to like, the low 70s. So it doesn't seem unrealistic that we could come down to the 80s, 70s, or even potentially the 60s, backtest the 200 exponential and simple, find support at these levels, and then see a massive upside move after that for, months, years, even decades into the future. Now, obviously, that's all hypothetical. We don't know what's going to happen. But when we look at the longer term time frame and we really start to build a case for oil or, for energy in general, we basically topped out, went sideways, capitulated, lower high, capitulated. And then here we have reclaimed key levels. We're back on top of 200 exponential and simple. We essentially averted the bear market. If it would have lasted much longer, we would have been in a real nasty looking bear market on oil. That didn't happen. We reclaimed those levels instead. The 200 exponential is accelerating towards the 200 simple. We know when the 200 exponential crosses over, which is likely to happen, maybe a year from now or something like that, depending. As long as we stay above those levels, eventually 200 exponential cross above, that's the beginning of the most powerful uptrends. But oftentimes what happens, and this is a perfect example, we break above the 200 exponential and simple, confirm back into a bull market, the 200 exponential starts crossing over the 200 simple, we backtest them as support. The market says, hey, I want to know, are we bullish now? Is this really a bull market or not? So it pushes the price, people sell off all the way back to that level, and then the tug of war happens at that fair price, at the 200 exponential and simple. And the tug of war takes place, and then eventually who wins? Well, in this case, the bulls win, and we start to move away, and this thing goes absolutely parabolic and puts in its all-time high. And that run, basically lasted from 2002 to 2008. So a 6-year, bull cycle, and then eventually we revert to the mean, lower high, come back down, etc., etc. So now here we are in a similar situation where we have broken above it. The 200 exponential is accelerating towards the 200 simple. It is not unrealistic to think that over the next few months or even, 6 months, something like that, that this price action comes all the way back down, back test this previous high as support, back test the 200 simple on the monthly, the 200 exponential on the monthly, and the potential cross, happening maybe 6-8 months into the future here, cools back off the, moving average, the stochastics. Obviously we have the hard sell. We've left the bullish control zone. So it doesn't seem unrealistic to me that we're basically at this exact place. Like, I don't like to look for, exact things to happen or whatever, but, they don't always look exactly the same, but they often rhyme. So we might not see the exact same thing happen, but we often see the same mentality manifest in, chart patterns, etc., or price action. So here we get into the bullish control zone. We cross above, we get the 200 exponential crossing above the 200 simple, we get the 821 cross back to the downside, and then we get the retest of the 200 exponential and simple. So we're looking at basically this little piece of the pie right here. And when we look over and we look at current price action, and we look at how the indicator oscillators look, well, here we've been in the bullish control zone. We've got the hard sell signal. We're above the 200 exponential and simple. 200 exponential is approaching the cross. The trend's starting to roll over. We basically have the exact same setup that we have back then. Now, does that mean it has to come all the way to 200 exponential and simple? Of course not. But if it does, 70 and, 65 are the areas we're watching for. Does it have to find support if it gets there? No, of course, it could break through it and go right back into a bear market and this is a failed breakout. But if it does, we know that this is fair value, and that's when people are going to be looking to buy for essentially the best opportunity, as that is what leads into, this massive bull market. This is our back test. This is the absolute best entry you could get with confirmation. Here you get a better price, but you're in a bear market and you're buying a falling knife. So it's luck for sure, because you don't know, is this the bottom? Is this the bottom? Is this the bottom? Is this the bottom? We don't know. Obviously, we eventually get the hard buy right here. It pushes up, and then we get a short squeeze, all the way back down, or a long squeeze rather, all the way back down to a new low. And then that ends up actually being what amounts to like, the opposite of a throw over, which is basically the beginning of an uptrend instead. So we always talk about the throw overs, where we come down to a support level and then, or a resistance, and then we break through it. And then all of a sudden we can break through support because that level fails, or that breakout fails. The spring is the equivalence. It's just the opposite. So here we come back down to the support that we've come to 1, 2, 3 times. Every time we came down to that level, we found support. and then we start to find support here. We get the buying signal, everything looks good, and then here comes that long squeeze, and that ends up being that spring. So as soon as we break down to a new low, that actually is the best buying opportunity, but you don't know that. No one knows that's going to be the buying opportunity. The idea is to actually squeeze out everybody because they put their stop losses and say, if a new low comes in, we probably go lower, I'll just reevaluate and buy later. So that's the mentality of the markets. Well, the market makers, the whales, everybody knows that. So they squeeze out the shorts with what's called the spring, and then we come up here, and then that's our confirmation. When we find support here and the 821 crosses back up, this is where we, based on my strategy that I use, this is where it tells me, okay, it's time for us to be back in the market. And that's at $25 barrel of oil back in June of 2002, essentially. So from that level, obviously, we have the massive run up, we backtest fair value, and then we end up in a situation where we could be doing the same thing right now. Now, again, it doesn't have to happen, but we know what it's going to look like if it develops. We know our targets to the downside, and then eventually, obviously, we've laid them out a bunch of times, but our targets to the upside. So not unrealistic, in my opinion, to think that oil is going to go through, some more sideways action, distribution, fall out of this range, backtest some key levels of support, eventually find support somewhere in the, possibly low 80s, possibly low 70s, definitely low 60s, I would think. When I say definitely, I say that very loosely because anything could happen before then, But that being said, all that would be is just a back test before, this massive leg up to new all-time highs. So we'll see what happens. That's my base case, obviously, on oil and why I'm so bullish long-term, but short-term, it looks like we are getting ready to put in some downside. As predicted, obviously, it's playing out beautifully. So next on to the Dow Jones. So the Dow was able to close back above the 8 and 21. Obviously a good sign. We had some, actually we didn't really have bullish divergence on the Dow in the same way we did on the other indexes. But we got a bunch of green histograms. We're back near the zero. We have the blue slope line on the TDMACD. It looks like we're getting ready to try to bounce the stochastics. The blue is looking like it's going to bounce off of the pink and then continue up. Looks like Dow wants further upside. And you know what? I may have improperly stated or worded the kind of like time schedule. Obviously, I've been talking about our little, sand timer recently and how like the last grains of sand are falling out, coming up to like our Fed rate hike or Fed meeting, etc. So that being said, we were talking about it in the group and verified it's actually on the 26th, and then the 27th is the second day of the meeting, and then also JP will come out and speak, Powell, Fed Chair Powell. So he'll come out and speak and do his little deal, answer some questions, tell us, all the info in like his little form. That being said, that's the date that we're counting down to. And when we look at the actual, I looked at it, a while back, and I think I had like an inaccurate picture in my head of what the last couple of weeks looked like. But we basically have all week this week, and then the weekend, and then we have Monday, Tuesday, Wednesday is D-Day. So we essentially have from now about a week and a half. And I had said this was the last weekend for Bitcoin and cryptos to run, or like the last full week for stocks to run, etc. I definitely misstated that because we have this whole week and then we have part of next week as well. So we'll have to see how that develops. There's definitely a couple more grains of sand left in the timer than maybe I was leading on to believe or mistakenly, saying. So that being said, we know what the target levels are. We know when the target date is. We essentially now know, okay, we have for stock market, we have a full like 7 trading days for it to do something. And what does it need to do? Well, if it's going to do anything, it needs to be, bullish, obviously, because it's already bearish. So if it does nothing, it just continues being bearish. So we basically have a week and a half in the stock market to try to do something, build some kind of positive momentum. So looking at this weekly chart, we know the first thing that needs to be done, we need to recapture the 8 on the weekly, which is above 31,533. After that, we need to recapture the 21, which is above 32,570. That's a little ways out, obviously. And, we'll have to see how the markets develop in the meantime. But we don't want to get too excited. Now, granted, we had a pretty aggressive close to that weekly candle. Here it was pretty bearish. We had a really nice bullish candle. We had some kind of indecision. And then this was basically a heavy sell-off that got bought completely back up. So the week actually closed green. That's good to me. But we still haven't gotten above the 8. And we know that if this plays out the same way the NASDAQ or the Russell or, a lot of other charts play out, the first thing you do is retest the 200 exponential. Then you retest the 8. Then you come down and retest the 200 simple. And then from there is when you decide what's going to happen. And if this was crypto, I'd say, yeah, maybe we're not coming down to 200 simple. But because this is the stock market, 90%, maybe 75%. I don't know the actual statistics, but very, very high percentage of stock market traders are using simple moving averages or like SMAs. Crypto people typically use EMAs or exponential moving averages because there's so much more volatility. Now, it doesn't mean there's not people in either camp that do the opposite, or people like me that do both. But that being said, it's much more likely if this was going to bottom off of the 200, it would bottom off the 200 simple. So again, it's a little thing to get hung up on, but we'll see how it plays out. And as far as the monthly, what's really happening on the monthly? Exactly what we said. We just had a nasty bearish candle. We're very close to confirming the 821 cross. Most likely thing to happen is we come back and back test it. 32.5 is where we'd have to get back to back test it. From there, we could wick up, we could close above, we could go back bullish, or we could wick up, we could get rejected, we could go bearish. That's likely the situation, at least for me. Hard sell signal, likely to get the cross to the downside. All red histograms, red slope line. Stokes are accelerating away from each other. Not even in the bearish control zone yet, which if we did enter into the bearish control zone, it would be the first time since 2008. And when we see that happen, essentially corresponded with the retest of a 200 exponential and simple. So we don't know that that's the situation. We don't know that that's going to happen, but we're setting up for that exact situation to play out. So that's what I'm looking out for in the Dow Jones in the coming weeks or months. SPY looks almost exactly the same. There's not really a lot to see here. We were able to close back above the 21. Again, on the daily, that's the first sign of what you want to see. We are using an awful lot of momentum going sideways. We did backtest off the 200 exponential back to the 200 simple on the weekly. Again, we had a pretty aggressive buying candle. We did close negative on the week. Not bad. Still pretty bullish weekly candle, if you ask me. And then on to the monthly. Again, same thing. We're looking for that potential backtest, and we have been. We assumed that after this disgusting monthly candle that we would get some sort of bullish bounce. And we said, a decent bullish bounce closes halfway up the top of that previous candle. So a decent bullish bounce would be somewhere around like 400. If we get back to 400, close this monthly around that level, it's like, okay, there's still a little, punch left in these bulls. If we get all the way back up to, basically back above 411, starts looking real good. Like we're reclaiming this level and we're essentially, averting the cross. And then if we close below that level, we likely confirm. So the most likely situation for me is we backtest, we get rejected, and then we go lower, over the next few months. Again, all the momentum is to the downside. And we see a similar situation like this, taking place basically right here. This is where it looks like we are, on time frame. It looks like basically we're selling off right here. It's pretty aggressive. We're getting ready, we're starting the process of the back test to try to stop that 821 cross on the monthly. That's May 2008. Here we fail to save the cross, and then we go into full-on capitulation mode over the next 6 to 8 months. Again, let's look back here at the time before that when it happens is obviously 2001. It's .com bubble burst. We come down, we're about to cross, we try to save the cross, we fail, and then after that we just slowly melt down over the years to come. So two different scenarios. Here we get the fast capitulation. 2000 we got the slow meltdown. Both situations happened exactly like this. We led up to it. Could we get a situation like this? This is the Rona one. We melt down. We're about to get the cross. We backtest it. Why do we backtest it? Fiscal and monetary policy. Massive bailouts. So are we going to get that again? It seems unlikely with record high inflation, for 40-year high inflation while it's continuing to accelerate. Seems unlikely. So that being said, maybe we're in the middle of the backtest, and then again, we're going to get that scenario where the backtest fails and then we go lower. Now, do we get the quick, 6 months down, and then all of a sudden we're at 240 and we're retesting the 200 exponential and simple, and that reminds us, essentially of 2008? Or do we get the slow just march to the downside, just lower high and lower low after lower high and lower low, all the way down here over the next 2 years? I don't know. Either one's going to be very painful. If it lasts only 6 months and we get down there, it's going to look nastier at the time, but hopefully the recovery won't be as bad. If we just slowly melt down and just put in lower high, lower high, lower high, 2 years plus into the future, that's going to be disgusting. And a lot of people are going to capitulate, not just based on price action, but time as well. So the time period, can be much, much nastier. I mean, if you have dead money or you're down 50%, but it's only going to last 6 months, it's like, that's not so bad. I mean, it's terrible, but, if you're stuck, you're stuck. If it goes on for 2 years or 5 years or 10 years, that's when people eventually just capitulate and give up. That's what it, essentially is. Just people saying, I give up. I just want my 20% back and I'll take my 80% losses and I'll go play a different game. And that's, that's the worst case scenario, obviously. Best case scenario, we save price action, we rally back up to like 410, 412, and then boom, full on melt up. We're back in the game. Let's go. Which one seems most likely? I would say probably rejection, and we go lower until I see something different. So IXIC, NASDAQ, obviously slightly more bullish. Looks like we're about to get the 821 cross off of bullish divergence on the daily. The weekly is bouncing. We did come down to 200 exponential, got rejected off the 8, came all the way down to 200 simple. That's the situation we want to see play out on the major indices. We don't know if it's going to happen on the Dow. We don't know if it's going to happen on the SPY, but it would be much more believable if it did. That being said, still chopping around right here, back above the 200 exponential, so that's good. Looks like we're about to leave the bearish control zone. Looks like we're very close to the stochastics crossing back bullish. Multiple green histograms on the weekly. Looks like it wants to bounce off this level. It would make sense to find support around this level. When we look at the monthly, we've already confirmed the cross. We came down, we tried to backtest it to stop it. It failed, and we had a pretty nasty close. We've had a decent bounce from this level, but this is also just that key level we've been watching at, like, 11,000. So again, kind of getting mixed signals here, but this looks very bearish. The last time we got that negative cross, that bear cross, was 2008. The time before that was 2000. We know both times it melted down. One time extremely bad to 200 exponential and simple. One time was much less bad, overshot to 200 exponential and simple. Which one does it look more likely to us now? Based on our distance from the 200 exponential and simple, I would say this looks more like, a basically rolling top instead of a blow-off top. This is a more traditional blow-off top, what people expect. This is more of just a rolling top. Either way, this situation, the distance from the 200 exponential and simple, looks much more reminiscent of 2000 NASDAQ.com bubble. As opposed to here, we were actually still pretty close to the 200 exponential and simple, and actually the 200 simple was getting ready to cross over the 200 exponential, so we had been losing momentum for literally like 8 years at this point in time after that massive sell-off. That is not what we look like right now. So it looks like 2000 all over again, in my opinion. So we'll see. Again, do expect some short-term upside. But eventually, the cross has already happened, so we can't even invert it now. We could cross back bullish, but we can't stop it. It's already happened. It's printed. It's done. It's said. It's in the books. So for the Russell daily, again, the weakest of the closes, we do see some bullish divergence. We are getting a little bit of, it's more sideways than upward movement, to tell you the truth. As far as the weekly Russell, this one shot straight through the 200 exponential, came down to the 200 simple, back tested the 8. So this was even weaker. It didn't even find that temporary support like the NASDAQ did before going lower, or like we've seen so far on the SPY and the Dow Jones before. Well, we don't know what's going to happen. But assuming, this is the worst, obviously, because it's below the 200 simple, it's very close to confirming into a bear market on a weekly time frame. And it is pretty weak down here. Buy, sell right after it. Maybe we're going to get a buy right afterwards, and that's the bullish divergence signal, and we are going to get a decent bounce from here. We don't know, but there's definitely some potential for it. Obviously, Russell is weak and trash. The monthly chart confirmed already the bear cross. Did the same thing for the Rona dump, did the same thing for 2015, did the same thing back here in 2008, and then did the same thing back in, essentially 2000, crossed back bullish, and then actually had the dump. So again, we've had a couple like weaker times where it crossed down, but that's just because this is a weaker index. It's just full of zombie companies. So, we've already had a pretty aggressive cross down. We're already inside the bearish control zone. Again, the last time we made it all the way to the bearish control zone and had the bear cross, this was back again in 2008. So with the weaker cross right here in 2015, with the weaker cross right here, or like the V bottom in 2020, neither time did we make it into the bearish control zone. So when we're in the bearish control zone, that's what it looks like when you get that disgusting 2008 crash. And again, relation to the 200 exponential and simple, that looks more like the setup we're in right now. So now again, we did have a cross down and then came back tested a couple times and then saw a capitulation. Maybe we get a situation like that. We're at a very strong support, but obviously the Russell is weak trash. And I hear that narrative again where people are like, oh, it's all about small caps out of the, recession. It's all about small caps, small caps, small caps. And I'm like, I mean, I get it. You're like, oh, small caps been getting wrecked. And, it's a bunch of zombie companies, so they're cheap in relation right now. Well, sure, but probably because like 50% of them are going to go away in the next couple of years because of like misallocation of capital, and human capital as well as like monetary. So that being said, let's take a look at our indexes. XLI on the daily, just holding support right here. I'm not going to go and do like the whole like daily, weekly, monthly on all of these, but we'll essentially look at just a bunch of them look the same. So on XLI industrial sector, again, we're finding support at the 200 exponential and simple temporarily, and also the 2020 high. So very strong support. You would expect a bounce from this level. That being said, when we go over to the monthly here, we're basically about to cross that 821 to the downside, almost unavoidable with, 12 days left. So it looks very, very nasty. So while it does look like a nice area to find support, at least temporarily, we probably are going to see lower prices on the XLI and many of these other charts as well, very clearly in a bear market. So XLP, consumer staples, is basically confirming the bear market. Now we're back testing, trying to avoid the bear market from happening. Unfortunately, it looks like we're going to get rejected and it's going to roll over. Now, is it possible we pop up here first and retest 74.22, 200 simple? Seems likely to me before going lower. Weekly already has crossed the downside, looks very bearish, trying to find some support off of those bounces, still well above the 200 exponential and simple. For a relationship, look, most things have melted down, or a lot of these sectors have melted down already. Even a couple of most of the indexes have melted down already to 200 exponential and simple. But look at this thing, still in a decent, moderately strong weekly bull trend. Nowhere near threatening the 200 exponential and simple yet, although we are below the 8 and 21. So again, much, much stronger overall. And we've been talking about how this was going to be a safety sector forever. I mean, it's well known. It's not like we made it up or anything. It's well known, obviously. Consumer staples is going to stay strong going into like recession, depression, whatever, because people are still going to need their basic, whatever you want to call them, amenities or needs filled. So that being said, the monthly is still on top of the 21, much, much stronger, but does look very, very toppy here. So there's two examples. One is the worst, sector. One is the best sector. So XLF financial, again, hanging on at support for now. Just very similar in overall look to most of these markets. Hanging out at the 200 exponential and simple on the weekly in the bearish control zone. Looks pretty weak, but again, we would expect at least temporary support from this level as it's tying into our top, from back here, our top from here, our top from here. So we would expect at least a temporary support at what has amounted to, basically 12 years worth of support, or what was resistance for 12 years on a backtest should act as support. Now, that being said, on the monthly, we've got to wait to fall. If this area does let go, there's some stairs down on the way, but we could easily see, another 20% plus down to support. So we're getting a, pretty good idea as to what's taking place right here. Real estate, again, bouncing support somewhere in the middle of all these other sectors. Backtesting in 200 exponential and simple, but still on top for now. And then when we go to the monthly, very, very close to confirming. We're pretty far below it. Again, at key support, momentum to the downside. We would just assume that we're going to continue seeing downside until we start at least reclaiming short-term support levels. So XLV, healthcare. So again, this looks a lot like consumer staples. We broke below, 200 exponential and simple. We put in a new low. We're back testing it to confirm the bear market. It looks very much like, we will get rejected here and go lower on the daily. When we look at the weekly, still well above the 200 exponential and simple, holding very, very strong, but it, starting to look more and more toppy now. Now we did put in a high here and then a low, so we could easily come back up and put in another lower high before going much lower. Don't want to rule that out at all. And obviously another one of our safety sectors. Healthcare could actually do pretty well with a lot of scenarios. There's a bunch more, sicknesses, or people got to get jabs, or, whatever the situation is. Oh, here they are to save the day again, with all that government money. What other situations? Well, regardless, people are going to need healthcare no matter how poor they are. There's a lot of different, excuses or reasons you could make for this staying strong, other than just historically, healthcare is a good place to be parked during like recessions or depressions, etc. So that being said, staying much, much stronger on the weekly, not even close to the 200 exponential and simple. And then, of course, the monthly way, way up here, still in between the 8 and 21, but looking very, very toppy. Very, very toppy. Now, what does that mean? It could just go sideways for a while, cool down, and then it would look okay. But realistically, we can see how these certain sectors have held up and how much better. Now, speaking of weakness, we see materials completely melting down. The weekly, again, completely melting down all the way at the 200 exponential. slightly lower for the 200 simple. And then we go out to the monthly. Still got a ways to go, but we're very close to confirming the monthly bear market between the 8 and 21 cross. XLY, consumer discretionary, again, somewhere in between, definitely one of the weaker sectors as expected, below the 200 exponential, slightly above the 200 simple on the weekly. It's hanging on for now. We would expect this area to act as support. When we go out to the monthly, though, we have officially confirmed the 821 monthly, which likely gives us a retest of a 200 exponential and simple. Again, have not seen that happen since 2007, since, essentially 2000. So if we can look at a chart and we say, okay, there's 3 examples of this happening, and 2 of them have played out already. What did those 2 examples look like? Well, 2000 and 2008 look extremely nasty. So if we're doing the same thing right now and it just hasn't played out yet, what do we assume based on, educated guesses? It's about to get pretty fucking nasty. Now, that does not have to happen. It does not. Nothing ever has to happen. But the market's going to give us clues. It's going to tell us, hey, maybe things aren't as bad as we thought. And we can look at fundamentals and technicals and see that right away. Like, if the Fed hasn't pivoted, there's no reason, in my opinion, to even think that markets are going to bottom or that they have bottomed. Same thing with inflation. If inflation is not coming down, there's no reason for me to think that anything has changed and that all of a sudden we're going to get out of this. We know for a fact there's only 2 ways out of this situation. Okay, either massive amounts of fiscal and monetary stimulus, which is the game plan for the last 40 years, or we organically grow out of this. But first, before you can get better from cancer, the doctors have to remove the cancer. So, we got to go through the painful period through the surgery, or, if you want to use the drug addict situation, if we want to just come down off of this monetary and fiscal, heroin, this drug addiction that the markets have, that the economy has, we got to go through the painful parts. We're going to get sick. We're going to throw up. We're going to feel bad. But eventually we can heal from it. Now, which one of those is likely to happen? I mean, come on, let's be real here. I mean, the system's been, it's been in charge or it's been the system in place for, depending on which portion of the economy or the system or, whatever we want to look at, it's been in place for, 30 years, 40 years, 50 years, 100 years, multiple hundreds of years, thousands of years. I mean, depending on what portion of, civil society you look at. But the fact of the matter is, Lindy effect essentially states that the longer something has been in existence, the longer it's likely to continue existing. So if the existing, system has been in play for, depending on what we're looking at, 40 years, 60 years, 100 years, right? We expect it would stay. The longer it's been in play, the longer it's likely to stay in play. So when I look at, what's likely to happen going into the future, well, most likely thing that happens going into the future is not the government all of a sudden saying, hey, we need less government and more fiscal responsibility, and, we got to stop with these deficits and just get our shit together. Yeah, right. I mean, can you honestly picture that? Now, is it possible? Sure, definitely is. Some leadership comes in, we get rid of all this bullshit, and we heal our way out of this. Sure, definitely possible. And I'm sure there's a country or a couple countries that will take that route. It'll be painful for a while, but they heal. Most countries, though, let's be real, especially if they have their own central bank, they're going to do the same shit they've done every other time, and they're going to maintain control and stay in control. They don't want the system to fail because they benefit from the system the most. If you don't believe that basic principle that the people in charge benefit from the current system, well, of course, that makes perfect sense. Of course they do. They're going to naturally over time, mold the system into something that benefits them more. That's a fact. It makes perfect sense. There's nothing to argue about. So from there, we can reason that it's in their best interest to not let the system collapse. So they're in control. The system benefits them. And we know that if they want to stay benefiting and in control, they need to keep the system from collapsing. So what's the most likely thing that they're going to do? Probably, the same thing, fiscal and monetary stimulus, ridiculous Fed, interest rates and balance sheet, growth and, monetary, expansion. I mean, printing money, whatever you want to call it. Of course, we just expect that to keep happening. And I know people are like, well, they can't just print money forever. Eventually it's going to blow up. Sure, but every other time they somehow manage to fix the system or at least band-aid it and make it go on for another 8, 10, 20 years. So it seems most likely, and again, based on Lindy effect, tells me these people are probably going to figure out a way to push the can down the road a little longer. I know it seems like it has to end, but there's literally people that have been holding on since 2000, waiting for this big crash to happen, that have been out of the markets for 20 something years during ridiculous amounts of explosive growth. And they've been completely out of it, waiting for the big crash, waiting for the can to run out of road to be kicked down, etc. And what's happening? We see these crashes, we find a way out of it. We see these crashes, I'm not saying that's how it should be. I'm not saying it benefits people. I'm not saying that, it's healthy or it's good for humankind. I don't agree with that. None of that at all. I hate central banks. But the fact of the matter is that situation has the highest probability of playing out. So when I look at these charts and then I look at what's happened and then I look at what needs to happen in order for that to change, it's easy for me to reason through and say, okay, we have been doing the same thing with fiscal and monetary stimulus for the last, however long, 40 years of it, lower rates, higher bonds, higher assets. But the last close example that we have to this is like the 70s, 80s period where inflation got out of control and then we had to change that and then go into a tightening. So that's what seems likely to happen to me and, a lot of people. And obviously that's what the Federal Reserve is telling us. Hey, we got to tighten down the hatches. People are going to lose their jobs. Things are going to go down in value. But eventually, that'll give us back some ammunition to get us out of like shit storms in the future. But that being said, we're seeing that shift happen. So now we know the market is specifically doing what it does based off of the Fed and this whole entire like symbiotic relationship between, rates and monetary like ease versus monetary tightening and, the opposite end of that same coin. So for me, it's easy to say, I don't expect there to be any kind of bottom or anything until those things change. So if we know the Fed is not going to pivot until inflation comes down, and we know that until the Fed pivots, we're not going to see, this monetary fiscal expansion, then it tells me that, well, that's easy then, right? We just have to wait on some positive inflation numbers and the Fed to at least decelerate their tightening. At least while they're accelerating the tightening, we wouldn't expect assets to go up. So that being said, it's easy for me to just say, hey, look, the trend is down until one of those things changes. So that being said, when we look at utilities, one of the stronger charts, the back test, the attempt to avert the bear market, again, very strong. One of the key support areas. When we look at the weekly, we're still well off of the 200 exponential and simple. And then when we look, we did get obviously a powerful test down. When we look at the monthly, though, it's still well above the 21, in between the 21 and the 8. So again, we see that these safety sectors have held up extremely well, as expected, as predicted, as discussed for months in advance. XLC, next, communication, the opposite, just completely melting down, absolute destruction taking place, just the worst place you can put your money. I mean, it looks like a Cathie Wood stock right here. So that, well, I'm sure some of them are actually. So that being said, melting down, taking out previous levels from 2020, just completely capitulating on the weekly below the 200 exponential and simple, and then on the monthly, just absolutely disgusting meltdown. Very, 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 very bad. The absolute worst place you could have had your money. Other than like a crypto that went to zero. XLK technology, again, just, it's basically, it's the NASDAQ chart, honestly. I mean, give or take. We're a little stronger. We haven't come down to 200 exponential and simple, but only because we were just so far off of it. And the various weightings in here, obviously. But XLK, again, still okay, but very close to the 821 cross the downside. Still a bunch of momentum to the downside. And again, just doesn't look like we want to be in front of this freight train, especially if it starts to pick up speed. So then XLE Energy has been the strongest this whole time. And now it's just now backtesting for a bullish retest of a 200 exponential and simple. So everything else had this move, comes up, puts in a lower high, breaks down below support, backtest support as resistance, and then puts in a lower low. That's the natural progression of what we would expect on one of these charts. That does not have to happen. We could easily melt down here and then backtest and then go lower. We could easily find support here and then go to a new all-time high. But the most likely scenario, if this plays out as expected, and as we discussed on the long-term oil chart and whatnot, the most likely scenario is from this peak, we backtest the 200 exponential and simple, we return to fair value after, extremely nice, strong bull run to the upside, and then eventually we come up and put in a lower high. So once we confirm in a lower high and start to come back down here, then it looks like this is rolling into a bear market. The alternative scenario is we come down here, we retest the 200 exponential and simple, and then we continue up and we put in a new all-time high, and if we or a new higher high. If we put in a new higher high, off to the races for sure. But we're still technically bullish right now, so this is technically still an entry opportunity before we go higher. But the question is, once we go higher, off of this entry, off of this buying opportunity, does this trade setup top out and like an internal retracement at like a 786 or a 618? Or does it take out that high and then we go to a 1.236 or 1.618 or, whatever? We don't know right now, but, we can pay attention to both scenarios, see what that would look like. So if we go, oh, sorry, you're on here. I just didn't have my tools on. So if we basically assume, now we don't know yet, so it's hard to assume. See, here we said if we're going to assume that was the low, and then we actually came down and wicked slightly lower the day before yesterday. So again, we have to move it over and say, okay, if we're going to assume that's the bottom now, we need to wait until we backtest the 236 in orange, which is $70.90. Once we backtest that, we confirm that this is a legitimate internal retracement fib, and then we likely go back up to, the 382 or the 0.5 or the 618, or where I would predict, which is the 786. So we backtest all the way back up to like 85 or so, put in a lower high, and then we go lower. Now, it doesn't have to happen like that. That's a very aggressive bounce from there. But also, this is still technically a bullish trend. So it's not unrealistic to think that we get a nice bounce from here and then it rolls over and fails. We could easily go higher. We could easily, top out at the 618 or at the 0.5. We don't know what's going to happen, but that's the situation I would expect to happen. We bounce here, we put in a lower high, and then we come down, put in a lower low. We find support around one of these key levels, and then when we really zoom out and we really look at this energy chart and we start talking about it, well, what is this really? It's 5 waves to the upside in blue, and that's all the 1 in green, and then it's ABCs to the downside in red, and that is just the 2 in green, and then we have 5 more waves to the upside that likely takes us to much, much higher prices. As essentially what would be the fundamental situation with that? Well, basically people realize, oh, hey, this like Green New Deal, green, energy bullshit, like it's great and it's good virtue signaling, but, the technology is just not there, or the funding is just not there, or, basically just, hey, even if we do this shit, it's going to take 20 or 30 years. We're not going to come off of the energy that we've been building up for literally hundreds or thousands of years all of a sudden and just quit using it. Like that would be like saying tomorrow, hey guys, guess what? Like, in order to, be more green and not hurt the planet, we're going to stop using fire. And it's like, well, what do you mean you're going to stop using fire? Like no more fire. Okay. No more matches, no more lighters, no more guns, anything that uses fire. We're not going to use that anymore because it's bad for the environment. And it's like, well, that's the stupidest thing I've ever fucking heard of in my life. We're not going to get rid of a key element, literally and figuratively, that has advanced human civilization, exponentially by, over thousands of years, by, exponential percentages over, our equivalents, whether you believe in micro, macro evolution, we came from apes, we came from fish, we came from God, whatever it is. The fact of the matter is we can look back at, human footprint and see, okay, fire was a massive increase because now it's like, oh, now we can cook food. Now we can store food easier. Now we can do other shit in our spare time because we don't have to go hunt for fresh food every day, et cetera, et cetera. And every form of energy we've ever taken on as a species has advanced us. So to all of a sudden say we're going to get rid of one of those forms of energy, I mean, there's no way to talk about anything other than just a massive backpedal. So when it's all said and done, how ridiculous is it to say we're going to get rid of fire? It's fucking moronic. Of course we're not going to get rid of fire. Like, you're stupid. So why would we think we're going to get rid of coal burning, energy, or we're going to get rid of oil, or we're going to get rid of, any of these things? Like, it's ludicrous. If anything, as we advance solar and wind and, water, forms of electricity, whether it's a hydro dam or, solar panels or, wind turbines, whatever it is, likely we just put that on top of what we already have. We don't get rid of the old stuff and say, well, we don't need those anymore. Let's get rid of it. What about all the people in, we don't think about the people in emerging, market economies or whatever, India, where people are riding bicycles or walking on foot. These people don't even have cars yet. Or in China, a lot of places like in the suburbs or far out in the country, these people don't even have cars, or they're using crazy old technology. We're not just going to get rid of all, ICE engine automobiles and now everybody's just going to get an electric car. You don't go from riding a bicycle to driving a $70,000 Tesla. Like, there's steps along the way. You buy a shitty old used car, from the 80s, and then you get a nicer car from the 90s, and then into the 2000s, you move from carburation to fuel injection, from fuel injection to, hybrid energy to electric. Like, there's stages of progression, and anybody that doesn't understand that, probably shouldn't be like, they shouldn't have a platform, honestly, whether it's politics or influencers, etc. So when it's all said and done, massively, massively bullish on energy going into the future, and all different kinds of it too, green and traditional. But let's be realistic here. So again, looking at the technical analysis here, I mean, this chart looks absolutely phenomenal, like long term. Short to medium term, you know, the daily looks like it wants to bounce. The weekly looks like it wants to go lower. But where are we going lower to? You know, key support levels as we confirm into a bull market. This is, you know, we already have a bunch of confirmations. We just talked about this earlier with oil. The 200 exponential has already crossed above the 200 simple. We're confirming into the beginning of a weekly bull market as we get an 821 bearish cross, which is likely just a retest to see when we return to fair value. Does the market agree? Hey, we're bullish now. This goes up from here. Or does this fail and we go lower? We don't know. But again, fundamentals and technicals would tell us likely we come down here, find support, and then go much, much higher. And then again, when we look at the monthly chart, what did we do so far? You know, we basically found a temporary top. We don't know how temporary, but we know it's a temporary top. Bearish engulfing monthly candle. Back test of the 200 simple. Where do we, you know, maybe this is the bottom. Seems like we go lower. Hard sell signal. Likely we come back down to 200 exponential and test that as well. Previous times when we got the hard sell, we got the bear cross and we came all the way down to 200 exponential and simple. Here we get the hard sell, bear cross, come up slightly higher, back to 200. We don't know where. We know likely though, we're in the process of that retest. Hard sell, leaving the bullish control zone, multiple red histograms, beginning of a very strong bull trend, but a short-term, you know, oscillation to the downside in the middle before we go much, much higher. Seems likely to me. And that goes for all the things we always talk about, you know, as far as commodities in general, you know, energy commodities, you know, whether we're talking about, you know, electric, like hydroelectric or solar or whatever. I'm massively bullish on that stuff going into the future, but I just have a more realistic time frame. As far as coal, oil, nat gas, all that stuff, massively bullish. You know, uranium and nuclear energy, massively bullish. We literally have the most nuclear power plants being built right now that have ever been built at a single time in, you know, world history of humans. So we're building a bunch of nuclear power plants and they take on average 10 years to build and hundreds of millions or billions of dollars. And now there's literally hundreds of them being built. Seems like probably somebody that matters is spending hundreds of millions or billions of dollars on something that takes 10 years to build. And, you know, realistically, how much life do you need to get out of it for it to pay for itself? I don't know, depending on that, you know, reactor size, etc. But probably needs to operate for at least, I would say, 10, 20, 50 years to pay for itself. So somebody is planning, you know, arguably 20 to 50 years into the future right now. And those people have billions of dollars and they're betting on nuclear. So that tells me probably follow the money. Follow the money. So massively bullish on uranium, just not right this second is the only thing. But, you know, we've already made massive gains, obviously, on the way up on these energy plays. So that being said, transportation, again, looking very toppy right here, very weak, very, very cyclical. And we know that basically it looks like we're at one of those cyclical peaks. When we look at that weekly, we're below the 200 exponential and simple. We're in the bearish control zone. You know, we're showing a lot of those same signs. And then when we look at the monthly, we have confirmed the 21 cross, the 821 cross. Last time we did that was 2020. Time before that was in 2015. And then we actually don't have the big bear market leading in. But prior to that, 2008. So that being said, seems like there's more damage in store for transportation. And that will hopefully allow some of the inflation to let up a little bit, allow some of the supply chains to kind of reset. You know, it kind of makes sense when you look at the big picture and start putting all these pieces together and you say, oh, when I look at this individual puzzle piece, I see one thing. But when I put all these puzzle pieces together, I get a much broader picture of what's actually happening. You know, but then we can zoom in and just look at that one piece and we're like, oh, there's so much going on here. Look at all these breadcrumbs. Look at what's happening. Look at these clues as to where the market's going to go. And then we zoom out and look at the big thing. It's easy to forget about that one single puzzle piece, or it's easy to forget about the big picture when we're looking at that one puzzle piece. Most important thing is to always be looking at all of it and just refreshing ourselves, you know, because things change over time and sometimes the subtleties can be tiny. So that being said, semiconductors, again, the last of our, you know, four horsemen, well, not the last, but, you know, the other of our four horsemen, obviously confirming into a bear market, finding some support here, likely trying to come up here and put in that right shoulder for what appears to me a topping pattern, very clearly in a bear market on the daily. On the weekly, we're testing support right now. We would expect that support to hold at least short term. But when we zoom out and look at the monthly, again, this is stronger than many of our asset classes, but very, very close to that 821 cross back to downside. Here we lost key support. We back tested it. We went lower, we went higher, and then we closed under it. Here we tried one more time to push up. We failed and we capitulated. So that likely was our back test already. So we're probably very close to 821 cross to downside. Sell by sell. They're spaced out a little funny right here, but we leave the bullish control zone, and it's very clear that we are topping out right here on the monthly time frame. And cyclically, we know, when semiconductors top out, it's a big deal. This thing has been running, this sector has been running since 2013. So these things have gone on a massive parabolic rip to the upside. So if we do decide we're going to retest, or correct some of these massive levels just for that run up from 2008 to 2022, the 236 is that key level around like 113. That's our target, just to backtest the 236. And if we get down that low, which I'm not saying we have to, but if we do, and that lines up with obviously our short-term 2020 bottom, shorter-term fib we have here, the multicolored one, we're already at the 382 for that. So what usually happens when we top out, we backtest the 236, we go to a lower high, we come to the 382, and then we make up our mind what we're going to do. So if we are going to correct this whole 5-wave structure, it makes sense. We top out right here, we backtest the 236, around 115, we bounce back up, lower high, and then we come down to the 382. And that puts us somewhere around like 73, which is over a 50% haircut. Does it have to happen? No. Could we go lower? Yes. Could we, just hit the 236 and then run to upside? Sure. Could we already be bottoming and then we go? Any of those things are a possibility. But the fact of the matter is, we already see those 5 different paths laid out in front of us. And we're like, okay, which one are you going to do, semiconductor ETF? And they're like, oh, you'll never know. And they could try to trick us. They could fake left and go right. But we already know where the 5 paths are. So we might stutter step for a second, but then we know exactly how to follow them. As opposed to somebody else that's not prepared. And then all of a sudden it takes one path. And now they have to go back through, do their technical analysis, try to figure out what's happening, and then, act on the spot. We're already prepared. We already know which ways they're to go. Maybe there's a path we haven't seen yet and they cut through the woods. We'll be ready for that too. But that being said, the more of these like choose your own adventure possibilities we can lay out in advance, the less surprised we are. And when we're not surprised, we're prepared. And when we're prepared, we're not acting with emotions. We're acting the most intelligible way we can, giving ourselves the highest probability of success. Because, I'm sure there's been plenty of times in everyone's life where you've had a plan, you knew exactly what you're going to do, and then somehow you mess it up. And, you think, damn, I had a plan. Why didn't I just stick to the plan? What the heck? Everybody's been in that situation before. So we want to try to prevent that as best we can. So the 210 spread, obviously, we're at inversion. We have basically been dancing around yield curve inversion right here. It doesn't matter. The most important thing to us is once the yield curve inverts, the most important thing is, do we roll back over it? That's usually when the recession comes shortly afterwards. We're at resistance, but we have technically broken out. It seems to me like this is going to run to the upside and we're going to see rates, at 5% plus in the very near future. If inflation keeps up, that's probably very likely, as now the Fed projection is 3.25 by the end of the year. I could easily see us at 3.5 by the end of the year, honestly, or even higher, depending on how bad it gets, inflation. And the way that the housing is entrenched and takes such a long time to lag and show up in the data, we could easily see inflation much worse in the coming months. One big thing that people aren't paying attention to is with these inflation rates year over year, look at what the last number that's about to roll off is. Look at 1 year ago and look at what we just had obviously June end. When we get the July numbers roll off, look at what's rolling off on July. And are we now going to get a bigger print relative? If we see a 1% inflation rolls off and then gets replaced by a 9%, that's going to be a massive jump, but it's really up 8% year over year. If we see a 5% inflation roll off and then we're up 9%, it only looks like a 4% year over year. But it's still, realistically, worth paying attention to both those hypothetical situations as we've seen those oscillations. And now we can look at a year ago and say, okay, this is a big number rolling off. So we're likely going to get, a variable print because of that, or it's a small number rolling off. So we don't get as much of an advantage from it. So that being said, we have to look at all this stuff. We have to look at how it's all relative and whether it's adjusted for inflation, all that stuff, and then keep our eye on the prize. All right, so rolling into the DXY very strong here. Looking slightly toppy on the daily. Obviously, bullish control zone, starting to move back to the downside. Still pretty bullish, but again, showing some toppy signs for now. Losing some momentum. On the weekly, still very, very strong. I don't love hard buy signals in the bullish control zone. Typically, there's like a lot of chop, and then we end up topping out, but it could go for a long time. Here we got the buy zone right before the bullish control zone, and we see it went on a rip after that. Here we get the hard buy again at the very top of the range at the bullish control zone, and we saw more continuation after that. So not ready to say the dollar's losing strength. As a matter of fact, on the histogram on the weekly, still very strong, and this is literally about to get the 200 exponential crossover to 200 simple. This is the best looking chart pretty much of anything right now, like strength wise. And then when we go to the monthly chart, I mean, this thing's just going absolutely parabolic. Now, could this candle sell off and looks like a nasty rejection? Sure. We got 12 days to decide. Could it push back up and go even higher? Sure. We don't know what's going to happen. Could it be an indecision candle and then it confuses everybody? Probably going to happen. Bullish control zone, all green histograms, blue slope line, 821 cross the upside, 200 exponential above 200 simple, and both cross bullish. The literal only thing that could make the dollar DXY more bullish right now is if it was putting in all-time highs. So do I think that a little bit of resistance through here is going to stop us when we're the most bullish we've been in 40 years? Yeah, fucking right. Come on. I mean, if we get up here maybe 120, then we'll talk. Okay? If we break through that and we get up here and we retest the all-time highs, 163, then we'll talk. But do I think some little chump change, little wick that happened one time is going to all of a sudden just stop, a giant freight train, behemoth, world reserve currency from strengthening related to the basket of currencies? No. Get out of here. Come on. Let's be real here. Do I hope that the dollar tops out, for the world's sake? Yes, I really do. But it doesn't seem like it right now, so I wouldn't bet on that. And obviously I'm not. So Tesla daily closed back above 821, got the cross, starting to build some momentum. I told you guys already, I moved my stop up and ended up getting stopped back out of this trade. It doesn't look great to me. It already had a breakout. Didn't happen anyway. And, I just got to stick to my rules. We could easily have that 30-something% move to the upside, but I'm not banking on it now. There's a lot going on with Elon and Twitter and all this junk right now too. And a lot of stuff going on behind the scenes. And we're hearing about Tesla's numbers, not so great. And we'll see. We'll see what happens. I still think it's very overvalued. Long-term, love Tesla. But at 720, no thank you. I mean, but obviously we've been out of Tesla, since the thousands. So that being said, weekly chart, still okay. Well off the 200 exponential and simple. Monthly chart. Got to be careful on this one, below the 200 or below the 21, but still a little ways off an 821 cross. Momentum obviously to the downside. This thing again, if it decides it wants to let go, what are we talking about? Macro correcting this whole wave up here from 2019 with $35 Tesla. We're talking about just the 236 is what we've hit so far. So again, if we lower high it and go lower, the 382 is really like our first bullish target, and that's like 420. So you guys know I'm looking for basically, and Elon would love that, I'm sure. I'm looking for targets around 530. And then I'm looking for Elon's sweet spot, his tickle zone, the 420 level. And I'm sure there he'll be like, you know what? I'll just buy up all my Tesla stock, at 420 just because it'll be funny if that's the bottom. Because immaturity, I guess. I don't know. I love Elon. I think he's great. I mean, he's my favorite. He's my top 5 favorite billionaires. Now, granted, as far as like regular people, no billionaires make my top 5 list. But as far as top 5 billionaires, he's pretty good. He's pretty good. I mean, he's at least trolling and funny, so got to give it to him on that. NIO, much like the Chinese markets, looks pretty toppy right here. Tried to come back up and backtest the 200 exponential and simple. Looks like they're failing or rolling over in various degrees. Trying to cross the 821 on the weekly back to the upside. Very, very close. Again, we're at a decision point. You can basically buy or sell at this level and right away if you're right or wrong. So great spot to enter a trade, whether you're bullish or bearish. Now when we look at the monthly, it looks like we're basically backtesting, getting rejected, and likely to go lower. Bears are in control, all red histograms. Maybe this is the bottom. We don't know yet, but it looks like the bears are still very, very strong. It looks like China is getting ready to essentially capitulate and go lower. We look at Baidu, it reclaimed the 200 exponential and simple and then lost it right afterwards. That was basically its chance, in my opinion, to go higher, to start the bull run again, to go up. And instead, what happens? It fails. And it's not like people don't want to be bullish. It's not like people don't want to. It just means the market said, hey, everybody can try to buy here. Everybody can try to sell here. Let's see who wins. Who's winning? The sellers. Who's been winning? The sellers. So when we look at the weekly, back testing, likely before we go lower, in my opinion. And then when we look at the monthly again, China, same thing. Back testing the 200 exponential and simple on the monthly. I mean, that's bad. Nothing else, like pretty much in existence, is so bad that it's back testing its monthly 200 exponential and simple. I mean, that's horrible. So what is this? Is this a dead cat bounce off of key support before we go lower? Maybe. I mean, we are getting, leaving the bullish control zone, about to get the hard buy signal on the monthly off of key support. Maybe this is the bottom. Maybe this thing shoots back up and puts in another lower high and goes lower. Maybe it goes to new all-time highs. We don't know. Seems like a key area we would find support. But a lot of times when you hit a key area of support and nothing has changed in the markets, it's likely just a dead cat bounce, a reaction rally, a counter trend move before continuation in the direction of the predominant trend, which in most markets case is down, bearish. So Baba next, Alibaba, same thing, back testing 200 exponential and simple, still slope to the downside, clear rejection, at least for now. When we look at the weekly, again, same thing, just back testing, trying to get the 21 back to the upside, looked like it was ready to confirm, and then, reversion to the mean on the weekly would be a massive move, a 69 to 75% move to the upside, and instead we get this bearish engulfing candle and we lose the 821 and likely just continues lower from here. So try to build up some strength, but it looks like it's failing. And then again on the monthly, just a back test of the 8 before likely goes lower. Again, same situation though. Maybe this is the bottom where, monthly is trying to put in a bull cross right here. But let's remember, a lot of times we get the bull cross and then it just fails and goes lower. And then that's your flush out. So maybe China is really, really close to that one final capitulation flush out. Whether it happens the next couple of months, the next year, the next couple of years, we don't know. But it seems likely that China is going to get rejected and likely to go lower and probably put in a new low. So NVIDIA bouncing the 786 of our short-term fib. Looks like it wants to come back up here and try to fight the 200 exponential and simple, basically for a back test on the daily. We have confirmed into a bear market. We haven't back tested. We haven't had the reversion of the mean play yet. Seems likely. We already looked at semiconductors, so I'm going to skip through the longer time for AMD and NVIDIA and whatnot. The ETF essentially gives us a better idea of what the market's really doing. Here on AMD, we got the back test of the bear market and then went lower. So we've already tested back up, reverted to the mean, and then people decided lower. So maybe we get another one and we touch a 200 simple. Maybe we fall short again. We don't know. But again, seems likely we're going to get a pushback up here and then eventually just go lower. Apple, we're getting the back test now. We've already confirmed the bear market. We're now back testing it. So what is the difference? What's going on with some of these semiconductors, some of these like crowd favorites? All we're doing is everything else has been in a bear market for a while, back tested it, it failed, and then went lower. These ones are just now starting to back test to confirm that the bear market is real and then likely just go lower. And then we see a couple of strong ones like energy that are like, hey, we're now retesting the 200 exponential and simple, still in a bull market, but now are we going to be able to get enough momentum to go higher from here? And that's like essentially like what the market is showing. But almost everything with the exception of the dollar is basically saying, hey, we're for sure in a bear market or getting ready to go into a bear market or extremely like at risk of a bear market. The dollar, however, very, very strong. So, it's the one thing that's opposite essentially of everything else. And I know it blows people's mind because they're like, how can the dollar be strong? And you're like, it's the dollar in relation to the basket of currencies. It's the relative strength of the dollar. So Google next, again, same thing, bear market, kind of going sideways after the split. We're going to see what happens here. We're about to get that split. So we shall see. That is on Monday. So what happens typically after the split? Well, we know just from looking at Amazon, we know essentially it ran up leading to the split. We split, and then eventually, like right afterwards, it basically tops out and then just goes back down and revisits the lows. So when we look at Google and we say, okay, this thing has been kind of running up, it's a little off the highs now, but is this going to be, basically the top and then we go lower? I mean, we're already on the way down. So, realistically, we're about to have a 20-to-1 stock split. So, this thing's going to go down to like, 110 or something like that. Likely it goes down here, revisit the lows, and we see Google for the first time at $100 for a long time. And again, even on the long terms with some of these charts, they don't look particularly great. I mean, we're still off of the 200 exponential simple, But, you know, we're essentially looking like we're getting rejected, ready to go lower. That's how it looks to me anyway. And then Amazon, again, we just talked about what's going on here. Again, very, very weak on the daily. On the weekly, you know, below the 200 exponential and simple, got rejected, came down, revisited the lows. Are we going to backtest again before we confirm it to the bear market? I don't know, but I mean, this bull market has been going on since 2008, arguably, you know, since 2003, you could say, on Amazon. And now we're literally about to confirm into a bear market. So are we getting ready to correct, you know, 20 years worth of price action? Again, we don't know. We don't know exactly where we should be swinging off of in green, in orange. You know, the relative swing back here has already been taken out. So, you know, just a minimum retracement for like these macro targets. We're talking about like $62 is the minimum for the orange fib going back to here. Or if we retrace all the way back to the 2000 levels, you know, which is really just this whole big bull market, honestly, doesn't seem that unrealistic. The 236 in green is $41. So if you're like, oh, there's no way Amazon's going to go from $113 to $41. And I'm like, I mean, chart says there is a way. So we'll see what happens though. But definitely could be some serious damage over time in some of these assets. Now, again, we'll see if there's going to be a bottom sometime before then for sure. It doesn't have to go that low, but at least we know, you know, there's people that are buying into Amazon saying, oh, it could never get below X price. And they're thinking it's not even possible ever that we get to $40. We know it's at least a possibility, and there's a reasonable road there. So we can then take our, you know, risk and, you know, our positions, investments, etc., based off of that knowledge. If you don't have that knowledge, you don't know that you don't have that knowledge, you know, you're making shit decisions because you don't have the whole, you know, you don't have enough of the information to make a good decision. And then even then, who knows, you might make a bad one anyway. We might make a bad one every day. So Microsoft bouncing that 382, again, just kind of going sideways, you know, yet to confirm back to the upside. Looks very weak. A lot of this move, you know, there's so much energy has been wasted going sideways here, doing basically a bearish reset in the market, getting ready to go lower. And when do we go lower? You know, probably right around that Fed meeting. Twitter, very weak here, bouncing the bottom of this ascending channel. You know, again, bottom back here in like 2016, 2017. Been just finding support at these levels. Also, the macro 0.5 retracement has already taken place. I mean, who knows if how this plays out. It probably goes sideways and does nothing for months and months and months while some of this Elon Musk drama plays out. And then there's probably some massively bullish catalyst or massively bearish catalyst that the chart's going to show in advance. And then people will say, oh, Elon has to pay Twitter $2 billion, so now the price bounces. Or Elon doesn't have to pay Twitter anything. Or he says, F you, I'm not buying your company, even though the court says you have to. And then Twitter capitulates. We don't know what's going to happen. We'll see it in advance, though. But we know this chart looks terrible. But likely at support. Meta next. So at the 786 of this pullback from 2018. So we have given back basically that entire move. Wiped out literally like, I mean, 5 years worth of price action essentially at like 2017 levels. So the next thing, I mean, we've already just destroyed this fib from the 2018 low right here. So it only makes sense at this point in time. I mean, it only makes sense for us to look at this low in 2012 on Meta and then go to the high in 2021 on Meta and then fib from there. And we know we already bounced to 236 and then came lower. So likely we come down here to the 382, which again is that 2019 low right here and puts Meta at about $125. And then from there, I mean, might as well go down to the 50. See you at $80. I don't know. We'll see. But, you know, Meta looks like trash. Looks like absolute trash. No surprises, though, obviously. So let me jump in the chat here real quick. Going to wet my whistle, and then we'll keep ripping through some of these assets. We still got crypto. We still have commodities, a couple of them. You know, gold, silver, whatnot. Some pot stocks. Not a lot change in the uranium space, etc. And then we got some member requests as well. What's going on, Hunkiness? Good to see you. Parag, good to see you as well. If you're in the chat right now listening and you have not, you know, typed a message, obviously type some kind of message. Put an emoji. I don't really care. It just helps with engagement, and I would greatly appreciate it. So I'm going to take this drink, and then we will get rolling. So give me about 5 seconds. What's up, Jayhoff? Good to see you. Appreciate you, brother. Thank you, as always. Good to see you in here. All right, so let's keep going. We'll end on crypto. I'm going to do gold real quick. Not much changing. We're at 1700. You know, we've been talking about these levels forever. I know people are like, how is this happening? Manipulation. Who gives a shit? If you know an asset's manipulated, don't invest in it, or invest in the direction of the manipulation. If everybody knows gold is manipulated and it's going to go down, why doesn't everybody just short gold then? Or if everybody knows, you know, something else is manipulated, it's going to go up, why don't you just buy that? Like, why fight it? So just because you're on the wrong side of a trade doesn't mean it's manipulation. Now, I'm not saying there's not manipulation. There's obviously been, you know, hundreds of thousands, millions of fines for manipulation, whatever. Or, you know, illegal market practices, whatever. But who cares? Either trade with the manipulation, or get out of the way of the manipulation, or don't talk about it. You know, it doesn't do you any good to say this is manipulated and that's why I'm upside down in this trade that I took, because I'm right, but there's manipulation stopping the market from telling the truth. No, it doesn't work like that. Not around here. No excuses. So gold, very weak at support. If it lets go from here, likely goes much, much lower. Silver, absolutely pathetic. Made it into the 18s. It got as low as $18.18. This thing's just absolutely capitulating. I know I called for the teens. We hit 19 quick. We hit 18 quick. You guys know really I'm looking at like 1650 to 1750. We already hit the measured move. The silver chart looks absolutely terrible. Rough shape here. No surprise though. Gold silver ratio, you know, basically in a macro bull market on the weekly, looks very strong. Above the 200 simple, above the 200 exponential, accelerating. So what does it tell you? You want to be holding gold while this is bullish over silver. And then ACB, going into our pot stocks, Aurora Cannabis, try to push back up to 21, rejected, stopped at the 8. We'll see. We don't want to start getting excited, calling bottoms. Look at how many fake bottoms we've had, you know, along the way down, where we've had nice big bounces, where we've crossed the 821 to the upside, where we've back tested the 200 exponential and simple. Every time just melts down. This big meltdown, though, is likely. This is what I'd like to see at a bottom. I'd like to see just a nasty gap down, a complete just disgusting candle, and then just melting down lower, and then bullish divergence starting to show up. Price action just kind of going sideways. Everybody getting bored and just no buying, no selling, no nothing. And then eventually we can start getting bullish again. And I think that's likely to happen in the cannabis space over the next few months. But we don't see necessarily signs of that, but I think it's likely to happen. So Tilray is next. Tilray typically bounces the strongest. Obviously could not hold up that bounce. Came all the way back down below the 821. Again, likely just goes sideways to down for quite some time. I'm still waiting on a new low for Tilray. We put in an all-time low in March of 2020. I would love for this to take out that low, to go lower, and for everybody that ever bought Tilray to be upside down. Not because I'm mean, but because that's where you see legitimate capitulation, where people say, oh my God, even the one position I had that was a winner buying the absolute bottom ever now is a loser. Because when we look at this chart, and just an old reminder, because we haven't done this for a while, when we look at this chart and I look at this and I say, okay, how many people are losers? And we'll highlight the losers for people that have bought Tilray in red. Okay, so all these people that ever bought Tilray, you know, up until, that's all people that are upside down. Everybody that bought all through here for literally years and years and years and years and years and years, they're all upside down. And then the only people that ever bought Tilray, that still own Tilray, that didn't just, you know, trade it and take profits and get out, the only people that ever made any money on Tilray are this little tiny little bit right here. These tiny little bit of people. And they're like, oh yeah, we're killing it. Bought the absolute bottom and I'm up 3%. Congratulations, my dude. What are you going to do with all those gains? Nothing, because I haven't locked them in yet. And I'm about to be upside down in my position because Tilray's going to go to a new all-time low. What, bro? So this is our winners. This is the people that have bought Tilray that are winners. And then this is the losers. Okay? And keep in mind, I like pot stocks, but technically, they look like trash. They look horrible. They look like they're going to zero. They look like they're going to zero based on the technicals. So that being said, when these tiny little winners right here get beat, and then they too become losers, and we go to a new all-time low, and then we see that crazy capitulation candle and everything, that's when I want to be a buyer. I want to buy when everybody else is a loser and no one else likes pot stocks anymore. That's when I want in. So we'll see. Maybe that never happens. And we're like, oh, we missed our opportunity. even though we bought like really close to the low. Like, you know, sucks, right? Who cares? I mean, we'll see what happens. So that being said, that is Tilray and, you know, the worst chart in existence. Not quite, actually. So then we have CGC. So CGC, you know, obviously put in a massive topping pattern, coming back down here. Again, same type of situation. Only a couple people ever going all the way back to 2015 are still profitable in this because it's gone absolutely parabolic and then just completely melted down. Almost nowhere left for support at this point in time. Bouncing 786 right here would actually look like pretty good technically, you know, as opposed to just going lower. The 886 doesn't likely stop price. And then at that point in time, you know, it's either double bottom or new lows. Obviously, I want to see new lows because, again, seeing everybody a loser in an asset or asset class that I still believe in just makes me want to own it more. Because the difference is if you don't actually believe in something or the company or the crypto or whatever, when the shit hits the fan, you're going to second guess your investment. And then you're going to sell at the wrong times or buy at the wrong times. When you believe in something, if it's $100 and you like it, and then it's 50, you should love it. And then it's 20, you know, you should be all about it. And then if it goes to 2, you know, you should be doing everything you can, you know, to accumulate at those levels. If you believe in it based on, you know, a reasonable argument. Now, can it still go to 0? Sure. But if the upside is 100 and the downside is 0 and you're buying at 2, I mean, you really can't go wrong as long as you have correct position sizing, you know, and, you know, realistic likelihood, you know, hey, 50% it goes to 0 and I lose 100%, 50% it goes to 100 and I gain, you know, 50x. So CCJ, looking at the uranium stocks, basically at that level, we're like, oh, wait, are we about to confirm into a bear market and go lower? But obviously macro, you know, the energy view, we go higher. CCJ holding up okay. Global uranium ETF, URA, bouncing support around the neckline of what appears to me to be a topping pattern as we confirm into a daily bear market. Likely goes lower. You guys know how I feel about uranium. So next we have SEED, SEED. So let's zoom out on this one. Again, as always, you know, none of this is financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. These are member or group requests or whatever. So just because we're looking at these and if I say it's good or it's bad, obviously doesn't mean that I'm interested in it. Even if I was like, this is the best trade setup ever. This is absolutely amazing. Like, look at this upside potential. It could be an absolute complete trash crypto or company that I would never invest in no matter how good the trade setup is. Or it could be the opposite where I already have a position in it. So, you know, that being said, SEED, Origin, Agritech Limited. So on the monthly, you know, we know obviously we have back to 2004 price history, and that's at $48. Currently sitting at $9. We obviously have a peak here. We have a low right here. So what we want to do is we want to go from our swing high right here all the way down to our swing low. First thing we're going to check for is, did we, after hitting the low, bounce back up to the 236? We did. So now we confirm that this Fibonacci is valid. So now once we did that, did we touch the 382? We did. Did we touch a 0.5? We did. Did we touch a 618? No, we fell short. Also, coincidentally, the monthly 200 exponential and simple are around that level as well. So that would be a very, very strong resistance. But we didn't get there. We got to the 0.5, which again was a very strong resistance from our lows and then our highs right here. So then we backtest that. We come all the way back down. What do we want to see if this is going to start looking bullish? We want to see a higher low. So we have a low right here. We put in a higher low. Okay, that's good. So what could invalidate that this is the beginning of an uptrend? We come down here and we take out that previous low. And then it's like, nope, still going lower. What could validate that this is an uptrend? Well, we have a low, we have a high, we have a higher low potentially. So now we want to see another higher high. So maybe that's our move back up to the 618. We know this is a bearish trend. We know that this is a very, very strong resistance. We know we already made it to the 0.5. So one of two things going to happen right here. We either lose the trend and go lower, or we, you know, push back up higher and try to retest these key levels. We would still expect resistance at the 382. We would still expect resistance at the 0.5, and we would expect a ton of resistance at the 618. So if we're going to take a trade setup on something that looks like this, what are we looking for? Well, we're just looking for the validation versus invalidation. So it gives us targets to the upside, and it tells us when we're wrong to get out. So if we were going to take a trade setup right now and we wanted to enter into this, we know if we take out this, it looks bad. If we take out this, we don't want anything to do with this asset. So that's 50%. So that's not going to work for a trade setup unless we have massive upside potential. So if our initial target to the upside is 382, that's 55%. That's a 1-to-1 risk-reward ratio in a bear market. We have no interest in that. So that wouldn't even be a functional trade setup. Next option is the 0.5. Well, alternatively, we could change out our, swing low, our stop loss target, which we'll look at in a second. But just for this setup, basically, with a 50% stop loss and 150% upside right here, just to backtest the 0.5 and then go lower, that gives us a 3-to-1 risk-reward ratio, a counter trend because it's a bear market, obviously, but a bullish trade. That's at least acceptable for us to take. So 3-to-1 risk-reward ratio. And then finally, the real target, what we would expect to happen, whether we go lower or higher, would be a 300% upside target, the 618 at $36. So from 9 to 36 with a stop loss at 450, 50% downside, 311% upside, 6.29 to 1 risk-reward ratio. Counter trend, it's over 3-to-1 risk-reward ratio. It's actually double that. So this is definitely a nice trade. Now, the hard thing is, if we take that initial trade, it's not a good trade. If we take the second trade, it's an okay trade. If we get the good trade, it's a beautiful trade. So we have 3 different take profit targets along the way. The higher it goes, the less likely it is to hit the target just because we've been constantly going lower. So that being said, what is the other option for us to have a shorter term trade setup so we don't have to lose 50% of our money before we know if we're right or wrong? Obviously the monthly looks like it's ready to shoot up to the upside. So let's take a look at a shorter time frame and then see, okay, what could we do in the meantime that would put us in a better situation, a better trade setup than that one? Well, we're just going to look. This was our swing that we were paying attention to. Let's look at this swing right here because this is just a mini version of what we're seeing in the longer time frames. Here we have a low, then we have a high, then we have a low, then we have a high, and then this is a low, that's a high, and then we have a bunch of like chopping correction here, and then we just have another low right here. So we have a low, then a high, then a low, then we're looking for a new high. So it's the same thing happening, just seeing it like kind of like shorter time frames helps us to see what's going on. So instead of waiting for this low to get taken out before we get bearish, we could look at this series of lows right here and then say, okay, what if we take an entry where we're at right now and we look at a close below here as a stop loss, and then we can reevaluate. What does that mean? Well, maybe we get stopped off right here and then we come down here and find support and then we re-enter from a lower price. So essentially what we're doing is we're just saying, okay, we take a stop loss right here. We lock in those losses and then we avoid another 13% losses, and then we can potentially re-enter from there. Or realistically, we can avoid that extra 29% losses, which was the target down here for that longer time frame setup we just looked at. So now how favorable is this setup going to look? How much did that help our stop loss, and how favorable does our trade actually look now on a shorter time frame? Well, again, if we take that same entry and then we look at the stop loss here at 635, we're now looking at 29% stop loss, which is still a big stop loss. But again, if we compare that 29% to our 3 targets, our 3 trade setups, we have a 51% compared to 29%, 1.74. Still not great for what is technically a bear market still. And then if we go to our 0.5, that gives us 146 to 30. Again, 5-to-1. And then if we get the final move plays out, we're looking at that 300% upside, 30% downside. We're looking at 10-to-1. So that's probably the way I would approach this is, if I was looking to take on this trade from nothing, like I don't currently have a position, even though this trade setup is not favorable, I don't really want this to play out, 50%, 29%. I'm looking for basically that first one is just to get back to break even so I can move my stop loss to break even, and then look for more potential upside. So I can just get rid of my risk right away. As soon as we move up to the 382, I move my stop loss back to entry. And then if we come back down to my entry, I get stopped out, break even. If we continue to the upside, the trade is nice. But regardless, we eliminate our risk as soon as possible, reasonably. We don't want to just immediately, it moves 1% in our favor. We move up our stop loss, it comes down, stops us out, and then goes in our favor, and then we're kicking ourselves. So that being said, I'm looking for this setup, or I'm looking for, realistically, the big setup. But there's definitely a way, again, you have to just sort of ignore that 382 target, which we don't love to do, obviously. But if the potential on the, eliminating that first trade setup altogether, and then just looking at the 147 to 30, 5-to-1 risk reward, or the 300 to 30, 10-to-1 risk reward, that's how I would do it in this case. Now, would I take a trade setup in this? Am I bullish on this? Do I think this looks good? Does it have strong fundamentals? How do the technicals look, longer term, etc., blah, blah, blah. I mean, the truth is, it's at inflection point. When we look at this weekly, we're in between the 200 simple and 200 exponential. We're clearly in a downtrend. The 200 simple is flipping bullish. A bunch of times, either the 200 simple or 200 exponential has flipped bullish, and then we went much, much lower. So here we technically confirmed a bull market and then failed and capitulated. Here we confirmed bull market, failed and capitulated. Here we confirmed bull market, failed, and so far put in a higher low. So right now, you could take a bullish trade on this and be like, well, that makes sense. We're at fair value based on the 200 exponential and simple on the weekly. You take a bearish trade setup on this and say, well, that makes sense. We're at fair value. And whatever this is, it's going to zero. There's an argument for either way. We just have to find momentum in our favor, aka are we trading with or against the trend? A probability of success based on that, obviously. If we're trading with the trend, we have a higher percentage probability of success. If we're trading against it, we have a lower than 50% probability of success. Then we look at risk reward. We looked at the setups. We have to kind of doctor it around, move it around a little bit. The ideal setup would be the macro swing low. That's 50%. We don't want to take that trade setup, et cetera, et cetera. So we can reason our way through and then finally take an educated position or not take a position based on what we figured out. And in this case, you can make a case for an upside target. You make a case for a downside target. It's really up to you. This is one of the ones where when you're at the 200 exponential and simple, obviously we're bearish. So probability is we go down from here. Let's say 66%, we go down from here. 34%, we go up. So when we take that risk reward ratio, we multiply it by the probability of success. We better damn well be getting better than 1-to-1 once we figure all that out. So my basic general rule is, just to keep it simple, is if I'm going to take a trade setup with the trend, so in this case we're bearish. So if I was going to take a bear setup, I need that bear setup to have a 2-to-1 risk reward ratio. If I'm going to take a trade setup against the trend, which means I'm going to take a bullish trade in this bearish market, it needs to have at least a 3-to-1 risk reward ratio. So that being said, whether it's bullish or bearish, we just figure out, are we trading with the trend or against the trend? Do we have at least a 2 or 3-to-1 risk reward ratio? That gives us our position size, our probability of success, our risk reward, and then the last factor is position size. We need to make sure that if we take this bet one time and we go all in on it and we're wrong and we lose 30% of our portfolio, we're screwed. And that's a horrible decision. If we take a position and we only put 1% in this trade setup and then we're right and the position goes up 300%, I mean, that 1% of our position just went up 300%. So now that 1% of our portfolio is 4% of our portfolio. That's phenomenal. If we can make 3% of our whole portfolio risking the 1%, and then of that 1%, we're only risking 30%. So realistically, we're risking 0.3% of our whole portfolio to make 3% of our whole portfolio. That's phenomenal. That's amazing. But that being said, the probability tells us that actually this fails and this position, gets stopped out. So realistically, we're saying, okay, we're going to risk 0.3% of our whole portfolio on this trade setup. It probably fails and we probably lose that. But if we don't, maybe we 10x that 0.3%, etc. So that's the way I look at it and how I rationalize it and turn it from basically, gambling into like educated, I guess gambling. Depending on how you want. We're like going from degenerate gambling to just like, reasonable degenerate gambling. But that being said, that's how I would look at this. That's how I would rationalize it. And that's what I would expect to play out in the future. So we're basically at the best point to take a long or a short, which is fair value, which is the 200 exponential and simple. So we're there on the daily, we're there on the weekly, and we talked through the monthly as well. So that is it for SEED, SEED. Post is next. Post holdings. So obviously, we talk about consumer staples and how important they are, obviously, especially if we're going into like recession or depression or something. So obviously we would expect this to be doing quite well. We have history going back to 2012, obviously just going, essentially parabolic, consistently putting in higher highs and higher lows the whole way up, higher high, higher low, higher high now. Blue sky breakout, hard buy signal above 60. I don't love when we get those, but it doesn't mean we don't get continuation. We have a bunch of green histograms back above the slope line, and it's blue. Again, I prefer for this to come back down to neutral and then bounce. All this means is it's a strong trend. So what do we see playing out here that we have to be cautious about? Because this is a very bullish chart. What do we really need to be cautious about right now? Okay, there's one thing that jumps out at me immediately that says, wait a minute. We have a high right here. We have a lower high right here. And we have potential for a lower high right here. Or now we've taken that out. So we have to look at this high and compare it to this high. So we have a high. We have a lower high. We have a potential third lower high. Here we have a high. We have a higher high. We have already a third higher high. So one of two things is going to happen right here. Okay. Either this rolls over and we put in triple bearish divergence on a monthly, and it likely corrects very, very bad, like horribly to the downside, or the histogram continues moving to the upside, eventually takes out this point at like 480 roughly, and we're at about 350 right now. So this just rallies up here, takes out this previous high, and then when we compare this high to this high, we have a higher high on price action, and then eventually, if that scenario plays out, we have a higher high on the histogram, no bearish divergence, crisis averted, goes parabolic from here. We don't know which one of those is going to happen, but that's the bear case for it. Now, if we look at the weekly, we're above the 200 exponential on simple. They're both sloped to the upside. We're at all-time highs. We have an 8 and 21 across the upside. Looks really good. Looks really good. But there's one thing that catches my eye on this weekly chart. The 200 simple crossed above the 200 exponential right here. And the 200 simple is still above the 200 exponential right here. So again, one of two situations happens. We either sell back off down here, and then eventually this tops out and we roll over, or the 200 exponential crosses back over the 200 simple, the trend accelerates, and we likely just go parabolic. Again, we don't know which one's going to happen. We're in the bullish control zone. We're showing a little bit of weakness at the all-time highs on the weekly. We have all green histograms, blue slope line. Momentum still in its favor. The weekly chart looks like it likely goes higher. But we also know that once the 200 simple crosses above the 200 exponential, oftentimes what happens is we go from there, put in a new all-time high, and then eventually we top out because we're losing strength on the trend. Now, this was the opportunity for that to take place, and then it rallied back up and went to new all-time highs. So, crisis averted? Maybe. 200 exponential crossing over the 200 simple here on the daily looks very strong to me. Again, though, we have to be careful because what are we seeing? We're seeing bearish divergence, again, all over the place on these peaks. So, could we, crisis averted, bearish divergence, we'll move back up. This histogram comes back up, takes out the previous high, and then we have a high, we have a higher high, we have a high, we have a higher high. Definitely can happen. We're getting some serious mixed signals from this at basically a blue sky breakout. So what do I do in a situation like this? I would either play into the momentum with a super tight stop loss. Basically, if we start breaking down below like the 82 levels, I'll just wait and then, take the risk off. Or, arguably, some of these peaks right here, maybe like 78, you put in a stop on a daily close, and if we go below 78, I'll reevaluate lower. And then you just assume it's just going to continue going higher, and then we could just basically look at, fib extension targets. So if we take that peak back here from April 2019, and then we go to the low right here, March 2020, and then we just start looking at our fib extensions and see, hey, where are we likely going to go from here? And then we can, again, do the same thing with the trade setup. Likely hit the 236. So we're almost there, 87. After that, the 1.382, 1.5, or realistically, my target is either the 1.236 or the 1.618. Typically are where things top out. The 1.382 and 1.5 sometimes happen. Sometimes it runs and we go to the 2.618 or the 3.618. But, we just pay attention to these key areas and assume there's going to be other people looking at them and assume there's going to be other people taking profits when we hit those levels. So that being said, 1.236 key target for continuation. So again, if we were looking at this situation and we say, okay, this thing's in a blue sky breakout. So what do we want to do? Well, we want to basically take that stop loss at, let's say in this case, it lines up with our previous high from back here. Or you want to go by these highs right here. Arguably you could change your stop loss. Here from where we're at right now, it's 7% to down there. Or we could take, down to that like 78 level. It's like 5. So I would just leave it at the 7% stop loss. Assuming it's going to hold support here on like a daily or weekly time frame. And then I would just look at the upside targets. Obviously, we're at the 1.236, so that's not going to be a target. So I would look at the 1.382, 12% upside, 7% downside. Not great, but also it's continuation into a bull market. So it's okay. Next target would be the 1.5, 1584, 18.9% upside, 7% stop loss, 3%, 3x risk reward ratio. Obviously, with the bull market, trading with the trend, not bad, over 2%. And then finally, the 1.618 will be a target of $22 upside for a final target of let's say $106, 26% upside, 7% stop loss, risk reward ratio of 3.72. Minimum we want in a bull market trading with the trend is 2-to-1, so that is well over the 2-to-1. That's the setup I would be looking for. So essentially, what is this? You're buying a breakout. You're breaking out to new all-time highs. You're buying the breakout, and you're saying, hey, if we back test this breakout and we fail to hold what was resistance all through here as support, the breakout failed. It was a throw over. This was distribution. I got tricked and I got stopped out. I lost 7% of my position, which was whatever, 1% or 10% of my portfolio. So I lost fractions. What do I have to win if this continues to the upside? If the momentum continues, 26% of your whatever percent trade setup you take. So that's how I would look at this, rationally. And it's not unrealistic to think this thing just continues melting up to the upside. But if it does start getting nasty, we don't want to just sit in it and say, well, it should go up eventually. So that is post fundamentals and some technicals. Next, we have GameStop Corporation. Never heard of this one. GME is the ticker. Not sure what this corporation does, but just looking at the chart right here, from the low here, peaked out in 2007, and then obviously lower high, and then we come down and put in a new all-time low. At this point in time, people probably thought this was an irrelevant business. It was going out of business, but then suddenly there must have been some sort of crazy innovation in this corporation. They likely invented some kind of very important thing, like possibly a cure for cancer, or maybe some sort of like three-dimensional metaverse platform or something where people can interact in cyberspace. Possibly world peace. Maybe they cured world peace or world hunger. I'm not sure. Again, I don't know anything about this company, but judging by the chart, something amazing happened right here that likely changed human civilization as we know it. That's my guess, at least, just based on this price action. So now that we've seen that play out, I mean, we're off of the all-time highs, still trading very, very bullishly. We see obviously a hard sell signal up here. We see a bunch of red histograms. Looks like a topping formation. Back testing the 821, trying to avert the cross. If we do get the cross, we likely just retest fair value, which in this case for this world-changing asset would be roughly $47. And you would expect, we're in a bull market, 200 exponential is over 200 simple. You would expect $47 to hold, and then you would expect, whatever this mystery company is to also, just further its amazing innovations and continue to change the world for the better. That's what I mean, based on the technicals, at least that's what I would assume, looking at this chart, assuming obviously that this chart trades very technically, and that this is again some sort of amazing innovation that has no doubt made humankind better. So that being said, looks kind of tired right here. Looks like it could break down on the monthly, but it's in a strong monthly bull trend. It's in a strong weekly bull trend from here. I imagine this is where some core innovation, some key factors took place, and then after that, the market just realized the intrinsic value for whatever this amazing corporation is, just absolutely phenomenal. And from there, it just exploded to new all-time highs. And then again on the weekly here, looks very strong, going through obviously a longer consolidation correction. We see some weekly bullish divergence. We are back above the zero line, back above the slope line. We're getting a hard buy. It looks like this thing, the innovation, again, whatever it is, because I'm just not familiar with whatever this company is. I've never heard of it. But I can look into it further, and then we can talk about some of what it is that this company does and why it's so amazing. But we are back testing the 236. So typically in a situation like this, we macro from the bottom to the top. We come down to 236, continue to put in lower highs, break down to 200 exponential on the weekly, likely come down to 200 simple and the 382 next. So it seems like we have come down, bounced to another lower high, bounced to another lower high, back tested the 236, and likely the target is the 382. So it seems like this mystery company, GameStop Incorporated, is probably headed down here to the 382, which again is going to be roughly $65, $66. And then at that point in time, assuming nothing changes and it's still able to cure world hunger or cancer or stop war or whatever, again, whatever this company, this mystery corporation does, assuming nothing has changed and they're still curing cancer, it looks like it would bounce that 382 level and then likely, possibly return to new all-time highs, possibly retrace deeper. But eventually, I mean, I would expect this this world-changing innovation company to just go to new all-time highs, obviously. Unless something changed and all of a sudden, say their cancer pill is not working, or, maybe, I don't know, what was that movie? Charlie and the Chocolate Factory, like, they cure world hunger, but afterwards everybody turns blue and they turn into like giant blueberries and they have to get drained. That could obviously, if there was some kind of side effects to, whatever product they've created, could be possibly dangerous to the future of the stock. But again, chart-wise, though, it looks great. Bear market on the daily, trying to reclaim these levels. If we reclaim the 200 exponential and simple here, if we reclaim the 236, we could easily see continuation back up. I would expect that continuation to be to a lower high, at least temporarily. But again, longer time frames, this thing is still very, very bullish. The daily, obviously, just returning to what you would assume is fair value. Because you got to figure you're paying for the future earnings of what could be 100+ years of cancer, treatment, or again, whatever this does, stops war. I'm not sure. So I'll look further into this mystery company, GameStop Corporation. GME is the ticker. I'm sure none of you have heard of it as well. Was a member request, so I'll look into it, and then I can give you guys, more accurate view as to this amazing mystery company. And also, if you're new to the channel and you're not familiar with sarcasm, might want to look into that before you choose this as your next big investment opportunity. So that being said, AMC is next. Another request. Again, not familiar with this company or what it does, but just looking at the chart here, we can take a look and I can give you guys an idea. So it looks like we basically had a high here, absolutely melted down. Looked like whatever this was, I'm assuming maybe something in the biosciences department, lost like 90% of its value, going to zero, and then suddenly, just some sort of amazing innovation. Again, probably, I think maybe this was the one that was doing Alzheimer's, AMC. That might stand for something to do with Alzheimer's. I'm not sure how you exactly say that, but yeah, 95% out. So they were pretty much down and out. And then obviously the Alzheimer's drug gets approved or whatever the situation is. This thing just goes absolutely parabolic. Does take it back up. We'll see along the way how technically this was trading. Sometimes the biosciences or whatever this is, not that technical. But in this case, we have from the high here to the low, shoot straight up to 786. We backtest the 382. We hold the 0.5. We shoot back up, retest the previous all-time high, which was that double top right here. We actually shoot exactly up to the 1.236. So yeah, whatever this is, trading extremely, extremely technically. From once we hit the 1.236, we backtest the 100, and that's what we were just talking about on the other one we were looking at. We want to see that backtest hold. If it doesn't hold, we no longer want to be in this, because this was a blue sky breakout, and then it failed. So it was a blue sky breakout, should have kept going. It's backtesting, fails, starts capitulating down because it loses key support, tries to backtest again, can't get back above that one level, that one, the previous resistance that should have acted as support, but it failed. Backtest it, fails again, goes lower, comes all the way down to 618. Maybe it's bottoming now before it goes higher. I will look into this. I'm not real familiar with like Alzheimer's drugs. Nor is that, my specialty, but I will look at this. I know people are talking about biosciences. It's easy to get excited about this mystery stock, AMC Entertainment Holdings. That is strange. Maybe this is not the Alzheimer's drug company that I was thinking of. Again, I'll take a look. It does look on the monthly, though, trying to find support at 618. That is a key area. You would expect it to bottom. It is, however, getting 821 across the downside, so I would be very careful on this one, as it looks like there's definitely some potential to go lower. Oh, I'm sorry. You know what? I shouldn't have been looking at the 618786. I should be looking at from the low back here up. So it will be slightly different because we put in the new all-time high. So again, we came down initially to the 236. That was holding up, and then we capitulated through the previous all-time high and the 236. We came down. Oh, it was on there. I just couldn't see it. No, what is this one? Yeah, okay, it is on there. Hang on. So we come down to the 0.5 here, again, which is where we're bouncing on the blue fib. So we're bouncing to 0.5 for now. You know, we already back tested the 236. It makes sense. We back test the 382 and the 821 cross and the 786 in yellow, somewhere around $20, and then likely we go lower, which is our blue 618, and then we can start looking for a bottom around like 764 or something like that. So not the best opportunity for a trade setup on this one, in my opinion, on this Alzheimer's drug company, this revolutionary company. Bear market, you know, broke down below the 200 exponential and simple on the weekly. Looks bad, trying to reclaim those levels. Bears are still very much in control, trying to put in some bullish divergence and move out of here. If we go to the daily, just looking for that back test. So basically what we're looking for is that potential move back up to like 21, 22, somewhere around there. And then essentially, okay, do we get rejected and go to a new low, or do we hit that level, you know, consolidate and then go higher? So we'll see from there. Obviously, if they're curing Alzheimer's, I would imagine this can only go higher. But again, still looks weak. Short term, still very much in a bear market. All right, so we looked at some two very, very key revolutionary stocks there upon request. And now we'll move on to our final request for today's stream, and then we'll look at our cryptos. So we have QTEK, Qualtech Services, on the old NASDAQ. Again, this is just right up our alley. This is the type of stuff I would expect you guys to request. And by the way, I bust your guys' chops because you give me these charts right here. But like, I don't really care. I don't care if you give me an amazing chart or a terrible chart. Matter of fact, if you give me an amazing chart, I'll be surprised because it's so hard to find one right now. But the truth is, I expect every chart to look like this when you guys give them to me. Okay, so what are we doing here? So we have from our you know, basically trading range, $10. This is obviously a SPAC. We take our, you know, $10 range up here, and we look at, we're down at $1.12. We're at the lows, so we can't even begin to try to like fib from a high to low. So we could try to take like one of these previous like relevant swings. So here we had basically this all-time low, and then we bounced up a little bit off the low. So we can try to put like a fib extension target in play and see, you know, obviously you guys know I'm always looking at the 1.618 as the bottom. So I would be looking for, you know, potentially 98 cents, a dollar, somewhere around there. And then after that, probably like 66 cents. You know, and that's just from this one little recent puny swing. We could try to look at one that's like a little more serious. I mean, this is what, you know, if somebody was looking at a swing low to a swing high, they're going to be basically looking at, you know, whatever stands out the most. So maybe this one. As a matter of fact, we can look at it on the monthly and see if the picture is a little more clear. Oh God, no. I mean, there's no clarity here. I mean, this is obviously on the race to zero. So I didn't think the monthly was going to give us much, but I mean, you would have to call this a swing low to high, and then I would think probably, I mean, I don't like using a swing low to high in the same candle. So that's a tough one to even use. I mean, at least here we have a low, then we have a high, and it's two separate candles. Realistically, it's still the same candle. This is not an easy one, I'm not going to lie, because it just looks like it wants to just go down forever. Let's look at this. Let's see what that looks like. So we're going to take from this swing low to that swing high, and see how that looks. So again, we're at like the 2.618 now. So it either has to go like real nasty to the 3.618, or it's already like bottoming. Do we want to call this the bottom though? I don't know. I mean, these candles are, again, the ones that I like to look for, you know, where we basically take out the previous all-time high, all-time low, and now no one who has ever bought this is winning. That's always a good place to be, in my opinion. But also, you know, what is it going to do? It's going to go down, let's say, to $1, and then back up to $1.20, and then down to 66, and then back up to 50. You know, I don't know what's going to happen here. There's not a good way to it's not a good way to do this one, honestly. We have some kind of targets in play, but I mean, I don't know. You're like, honestly, you're catching a knife on this thing. The smart thing to do on this is just wait for some kind of 821 cross back to the upside, because we haven't had an 821 cross the whole time when it melted down. So it basically crossed bearish at $10, and then it went to $1 from there. So even if we have to wait and it gets back at $1.50 and then 821 cross happens, that at least gives us some possibility to start retesting these previous like swing highs. Because realistically, I mean, from here, there's nothing that even tells us that the bottom's in or likely in or possibly in. Because even if we just say, okay, like time traveler, comes back from the future and says, hey, this is actually the bottom, and we never go lower from here ever. And you're like, okay, cool. I'll fib from the swing high right here to the swing low. My method or way of confirming, right now you're telling me for a fact, 112 is the bottom. Well, I have to see for my method, we have to come all the way back up to 236, which is $1.86, before I can confirm that we have essentially, a valid fib. So that being said, I have to wait till we're like at $1.86. So you can catch a knife at 112, or you can wait for confirmation at $1.86. The smart thing to do is wait for confirmation. If you don't want to wait for $1.86 and the 236, we wait for the 821 cross on the daily. And then, if you don't want to wait for that, you go down to maybe like the 4 hour or something. I don't know. That's really like your next option. And again, right now, this is complete meltdown. We have a couple times where the 4 hour cross bullish didn't get much follow through. So I probably would just stick to the daily on this one. That's a smart thing to do. The smart thing to do is just, bet this thing goes to zero and just not mess with it. But it's possible, that there's some meat on the bone, I guess. But I would just wait for the 821 cross on the daily before I touch this. And that's assuming I was going to touch it. Like whatever it is, I just have to be, an investor in whatever this is. But realistically, there's a million things like this, including a lot of pot stocks. So I would much rather go for a pot stock than Qualtech Services. I would rather get like one of those, Alzheimer's or cancer, curing drugs or whatever we were looking at earlier. All right, so on to crypto, and then we'll rip from there. Let me jump in the chat real quick. Good stuff as always, says Jay Hoff. DRS your GME because WSB, rocket. Let's go. Moonshot, baby. Thanks for the rundown, killer, as always. Of course, brother, of course. And also, if you're not familiar with sarcasm, I'm not sure the ticker on that one, but I would definitely check out that asset as I've heard that class is extremely bullish. And according to this stream and the last like 10 minutes and 2 of the last 3 tickers we looked at, sarcasm is literally like going parabolic right now. It's in a definite uptrend. So that being said, we'll get back to reality. Don't forget the GME split. Yeah, that is actually huge. We talk about the, psychological factor of splits. And imagine like this, okay? You have one full pie, okay? And that's your pie. So you have one whole pie. But it's not cut up yet, okay? So it's just one pie. There's no pieces. It's just one big piece that equals a whole pie. And then when the stock splits, what happens? You take that same pie, that same one pie, that one piece of pie that you have that makes up a whole pie, and then you then cut it into, let's say, 6 slices, okay? So now you have 6 pieces of pie that still equal one whole pie. So you have no more pie. You have no less pie, but it's cut into more pieces. And that is a stock split. So historically, price runs up prior to the stock split and then goes down afterwards. Could go up forever, could go down before then. We don't know what's going to happen, but essentially the psychology of a stock split is people want to get the split, and then once they get it, they sell off. But it does technically usually run up leading up to it. So that being said, same piece of pie, no real reason. If you're like, hey, I'm going to pull out my calculator and figure out how much money I'm going to make off this stock split, if the price doesn't do anything different, nothing different. It's the exact same amount. You just have a bunch of smaller pieces. So, in a lot of ways, the whole psychology of the split made a lot more sense back in the day when we didn't have fractional trading and stuff like that. Maybe if you wanted an Amazon share and the only way you could get it is by buying a whole share, and the share was $2,000. So a lot of smaller investors or retail traders were just priced out because they just don't have $2,000 for one single stock of Amazon. And then it splits, and now it's $100 and 20-way split. So that one stock becomes 20 stocks that are equal $100 each instead of the one that worth $2,000. So now it's more approachable or more reachable for like your average consumer, stock trader, investor that just doesn't have a big portfolio. So that's the idea behind it, is it's more accessible. Now that being said, obviously with fractional shares and everything, you can just buy 10% or 1% or 5% of an Amazon share. So it doesn't really matter, but the psychology is still there. So anyway, went on a little tangent there about the splits, but yeah, sure. Definitely there's proven correlation between an upcoming stock split, price action before and after. So that being said, on to our cryptos, and then we will wrap it up there. What are we at time-wise? 2 hours, so we'll do these kind of quick. So Bitcoin futures chart, obviously over the weekend we kind of moved around, nothing really happened. So, again, the most important thing we're looking at is the futures chart and the 821. So we're in between the 8, we're under the 21, in between the 2. We have a bunch of green histograms, we have a blue slope line, we have the hard buy signal, we left the bullish control zone. The price, the histograms, the stochastics are moving to the upside. We're basically just going sideways. So what we're careful of right now is the exact same thing that happened right here. Now, it doesn't have to happen. This could easily just cross the 821 back to the upside. We're bullish. We shoot back up to 28K. The next thing you know, we're retesting all-time high. It could definitely happen, but there's like 100 steps that have to happen before then, and we're on step 1. Step 1 was we have to get above the 8, and then we can retest the 21. So we did that once, and then it failed, but then we put in a higher low. So it doesn't look bad right now. We're trying to carve out at least a temporary bottom. That being said, we have to be very careful because that happened here. We backtested 21. We backtested 21. It looks like we might get to cross the upside, and then capitulation. What happens? We fail to cross the 821 back to the upside. So we got to be very careful of that. So that being said, this didn't move over the weekend. So let's look at our spot chart though, and look, can we believe the spot chart? Do we trust the spot chart right now? Because what happened on the spot chart was, we moved up over the weekend. We immediately sold back off. The adults are back in the room. Price action pushes back down. But this looks much, much closer to the 821 crossing the upside. Same as it did right here. And what happened? We actually got above the 21 right here. We actually got above the 21 right here. We actually got above the 21 right here. And then we almost got the 821 cross, and then it failed. So we see the difference between what happened. Here we can't close above the 21. Here we can't close above the 21. And we never come that close to 821 cross. So what is the difference? Well, it's the weekend price action. Over the weekend, the crypto cult tries to push up the price. No adults are playing. They're all off doing adult things. And then, the cult is trying to run up price. You got your guys putting out there pumpy videos, and you got, half the participants not playing. And, of course, whatever happens over the weekend just gets wiped back out once everybody's playing the game again. It's your parents are out of town. The kids vote on how much allowance is going to be for, the next year or whatever. And they vote it's going to be $100 per kid. And then the parents get home and they say, oh, you guys voted on the allowance? Let's vote on it again. And your guys' votes don't count. So then the parents vote and they go, oh, you're going to get $20. And so it's that's a weekend price action. The kids vote on their allowance. Then the adults come in and they say, no, you're dumb. You don't have any, relevance in this market. You get $20 because that's what we say you get. That's how I look at spot versus futures trading when they diverge from each other. When they say the same thing, that's the most reliable thing. When one says one and one says the other, mixed signals. But that being said, that's what I'm seeing really happen. And that's why I'm really respecting the futures chart a lot more than the spot chart right now. As far as weekly, still below 200 exponential, still below 200 simple. 200 exponential has already rolled over. We have 2 green histograms. We're in the bearish control zone. If we should have found support at this level, we didn't. So are we going to find support now and then try to reclaim this level? We know target to the upside is 27K to retest the 200 exponential. We know target to the upside is 22,742 to retest the 200 simple. That being said, this weekly close is okay. I mean, it's not just a giant bearish red candle. It got bought up, so it looks okay. What does this look like to you, though? I mean, it basically looks like, what is this chart? This chart, essentially, what's happening right now, looks to me like the weekly chart on the worst of our major stock indexes, right? I mean, it looks like the Russell right now. We came down to the 200 exponential. It didn't hold. We shot through the 200 simple. We're back testing the 200 simple as resistance. 200 exponential is already bearish. So our worst index in the stock market of our 4 major indices, the small caps, looks like trash, obviously, on a weekly. And then here we have the Bitcoin chart. Looks exactly the same. So you guys hear how I talk about the Russell and how much of a piece of shit it is and how it's just filled with zombie, dead, garbage companies that are going to go under. Well, does any of that apply to the crypto market? Is there a bunch of crypto companies that are going to go under? Is there a bunch of trash bag shit coins that are going to go to zero? I mean, the chart says yes. So again, very, very similar to the Russell chart. And the Russell chart is the worst chart. So, when they're like, why are you so mean to crypto? Why is your channel called Crypto Trend Trader? But you just hate it. You're mean and you're just calling all my cryptos ugly. And you just won't ever say that Bitcoin's going to 1 million. And you're a dick, Crypto Trend Trader. Okay. I mean, I'm just telling you the truth. So truth hurts. That's all there is to it. So sure. That being said, the Russell's garbage. Crypto's obviously garbage. Is the Russell always going to be garbage? No. At some point in time, it's going to be good. Is crypto always going to be garbage? No. At some point in time, it's going to be good. But right now, it looks like trash. The monthly chart has crossed the downside. This was our last 3 bear markets. We have a clear correlation with our 4-year cycles, with our highs, with our lows. The real question is now, is this going to end up being a macro bottom? Because if it's not, if we don't macro bottom this month, if this is not the absolute bottom of the bear market, and then after that, we just go parabolic again over time and just go into another parabolic uptrend, new all-time high within a couple years, and just shoot to the moon. If that doesn't happen, that's where we really have to worry, because crypto is going to likely be having a macro meltdown. And you guys obviously know my bear case for crypto. And you obviously know my bull case for crypto. You're like, what's your bear case? I want to hear it, dick, so I can unsubscribe. My bear case is probably like 14,000, then maybe 12,500, possibly 8,000, maybe 1,800. And I have a roadmap to each of those areas. And you're like, you're dumb. F you, unsubscribe. And then what's your bull case scenario? I mean, what? We did a video where we look at it and it's, a couple 100,000, 70,000, then 120,000, then, 300,000, then 1 million, then 3 million. And we have target roadmap to all those, what year we get there and everything. So if you don't like 1,800, don't get excited over 3 million, okay? Because they're both ridiculous targets, one way or the other. So that being said, Bitcoin still trash. Definitely not doing anything exciting right now. Trying to carve out some kind of temporary bottom. Hard for me to get excited after we did this once and it completely failed. How do we know it's going to be? I mean, if the 821 crosses to the upside right here, I will buy Bitcoin again, assuming we're going to get basically a retest of key levels like 28,000. And that's like, what, 40% increase or something like that. So all we have to do is wait for the 821 to cross. Now, it could still fail and we get stopped out. But, there's 80% upside potential on Bitcoin alone. So some of the alts are going to be ridiculous. 100, 150, 200%. So there's definitely going to be some potential setups here in the next week, 2 weeks, 3 weeks. We're going to have some massive volatility in these markets. Very, very exciting. So I highly recommend that you, sharpen those tools up. Now, that being said, do we get that move to the upside? Well, we know what has to happen. The 821 have to cross bullish before we can ever get up to those levels. So that's our trigger. 821 cross bullish, boom, we're in. Could it fail and roll over? We just get right back out and just wait again. And that's absolutely fine. We're going to get tricked sometimes, or a breakout's going to fail or whatever. It happens. So Ethereum, we talked about this. We've talked about this trade setup 100 times. It finally got the breakout of the channel, broke out, and immediately half the move has already taken place now. So very nice move here. Kind of stalling out for now. Still very bullish. We broke out of that level. Obviously, when we look at Bitcoin dominance, we'll see exactly why. I've talked about this multiple times about how there's no way crypto's bottoming here. I just don't believe it because the altcoins are just far too bullish. Bitcoin dominance on the weekly. So we lost that level. We backtested as resistance. And now we have that next week was just a sell-off. So we have lost this ascending green support line. Now, is it possible we still rally up from here, close the week back above it, and everything's still good? Sure, it's definitely possible. But this looks like definite weakness to me. We broke out. We backtested. Excuse me. We broke out. We backtested. Couldn't hold support. Acted as resistance, and now we're back inside the range. So likely we retest the heart line, probably all the way back down and put in a new low on Bitcoin dominance. And that probably means altcoins are surging compared to Bitcoin. So can that happen on the way down, or does that mean we're about to go up? I mean, I don't know. This is inconclusive for me right now. But the truth is, my base case scenario was playing out beautifully, and it's diverging from my base case. So now we have to reevaluate and just trust what the market is telling us. And the market is telling us Bitcoin is going to continue losing value compared to altcoins, at least short term. Total market cap, we're rallying off the 200 simple. We would expect a backtest of a 200 exponential. 1.07 trillion, still our target, been our target. Perfectly found support. We would expect that to perfectly find resistance. Bears are in control. Bunch of green histograms. Trying to find at least a short-term bottom right here. So Avalanche, we talked about potential trade setup right here. If we can close back above the 236, we did that. We back tested it. It looks like it wants to play out 45% upside for the 382 target, or the 0.5 target is 87%, or the 618 target is 141%. Obviously, risk reward is 8-1. Counter trend, obviously 821 are crossing to the upside. It just happened and failed. It just happened and closed above the 236. So the probability of success right here seems decent, at least. Still, obviously, a bear market, but starting to look slightly bullish, and potential for a nice 8-1 risk reward ratio from that entry point. So we'll see how it plays out. Obviously, altcoins are having nice runs from this level. So Solana on the daily still very weak, has not taken out that recent swing right here, confirming 821 cross to the upside. Definitely looking like it wants some potential to retest some of these levels. So if we look at the macro top right here, well, not the macro top, but the breakdown from April 2022 to the low, we've retested the 236 already. We got slightly higher. Seems like next target to the upside would be the 382, 49.81, the 0.5, $60, the 618 at $75. I mean, that's just dreaming, honestly. I don't think we get up to those levels, but we'll see. I mean, there's definitely some meat on the bone with some of these altcoins. 26%, 55%, 87%. Do those play out? No, probably not. It probably fails way before then, because there's just too many trash altcoins, and people are going to be picking their favorite trash, and they're going to be like, you know, digging through the trash. They find their favorite altcoin, and then they're going to bet on that one. And then everybody else is going to bet on their favorite altcoin. And because we're in a bear market, there's just not going to be enough money to pump all the trash at once. So a certain couple pieces of trash are going to explode to the upside. Certain couple pieces of trash are not going to do anything at all. Other trash is going to just move somewhere in between. We don't know which trash is going to be the best. All we can do is kind of sniff it and see, does it smell like it's spoiled? Are there maggots crawling on it? Like, how trashy is this trash before we, you know, try to put it in our mouth and, you know, invest in crypto. Obviously, I'm not eating out of the trash, but, you know, lots of people are. You know, occasionally I will dabble with an altcoin or whatever, but just for a quick scalp, not trying to, like, invest in this garbage during, you know, bear market. Most of these cryptos probably go away. So that being said, Polkadot, you know, at that potential entry point, reclaiming this key Fibonacci level, target to the upside of 1045 with a 45% upside, target to the upside of 1554 with a 116% upside. We have a stop loss taking out that recent swing low of roughly like 10%. So potential here for these entries. Again, we're breaking through this orange resistance. Likely thing we do is retest the yellow resistance, and obviously we're bouncing off the 618, trying to reclaim that level. Likely, if we push back up, we retouch the 0.5, retest the 0.5 or the 382. So that's what we're looking at. Just basically a bounce off a fib, retest the previous fib, and then 2 steps down, 1 step back up, and then 2 steps down. And then eventually, you know, we can look for a bottom in this. We don't know when crypto is going to bottom or anything, but temporarily looks likely to get a bounce from this level. Basic attention token, same thing. This is kind of looking like an inverted head and shoulders. We have a pretty clear left shoulder here. We have a pretty clear head, and then we have another right shoulder right here. So obviously we can use our little head and shoulders tool and just kind of see, like, what is that telling us? Where could we possibly go? Are we going to go from wicks? Are we going to go from, you know, bodies? Can we get a decent setup out of this? We can kind of take a look right here. So essentially what we have is just a little bit of a sloped resistance line right here. We obviously have the horizontal 0.5 right here as well. So if we get the move from where we're at right now above the 0.5 to start looking good, 821 crosses back to the upside, we likely are putting in a temporary bottom. Then we retest the neckline next at 46 cents. If we take out that 46 cents, we likely get the measure move back up, which takes us back to the 382 on our target, 200 exponential and simple for a bullish retest in the bearish downtrend before continuation to the downside, likely. But then also we can use the distance from the head to the neckline right here, and then we can use that as a measured move and say if we do break out from the neckline, it likely takes us up somewhere around like 78 cents. So from where we're at right now, you know, what are we looking at? Well, upside potential, you know, just to the 382 of 45%, measured move 94%. You know, downside, where do we know we want to exit this position where something might be wrong? This is failing to break out. Well, if we take out this recent neck swing low right here, it's probably going to go lower, and maybe we jump the gun. Maybe we're going to get something more like this, slightly more symmetrical, and we come all the way back down here, and then we can re-enter from that level instead. So that's what we would be looking at basically. So that being said, if we were going to put a trade setup in place for that basic attention token, we would look at, basically where we're at right now for a potential entry. We would say, hey, if it closes below the recent stop low, daily close, we want to get out. That's about 36 cents. That is a 7.6% stop loss. And then obviously our initial target to the upside is just a back test of the 382. That's 47% upside. That's 8% stop loss. That's 6-to-1 risk reward ratio. Trading counter trend, it's over 3-to-1. So nice trade setup. And then again, if that one fails, because we go lower, we don't necessarily want to, oh, what did I just do? We don't necessarily want to, just say, oh, that's it, we'll never trade back again. We just say, okay, that's cool. We're probably going to go lower, and then let's look for an entry somewhere down here in line with the left shoulder, and really we just jump the gun a little bit. So if we look for an entry back down here, and then we say, hey, if we take out the previous all-time low, we definitely don't want to be in this trade anymore because the head and shoulders has failed. So that being said, our entry price we would look for is 30 cents roughly, somewhere around here. We don't want to get too greedy, somewhere in between 30 and 35 cents, maybe a couple buy orders. But if we take out the daily close at 28.5 cents, we don't want to be in this anymore. So this trade setup fails, we get stopped out, no problem. We want to re-enter down here. We get stopped out again. We don't want to be in this trade anymore because we're going to new lows. And then we can reevaluate somewhere else. If this trade setup fails, we look for this trade setup. We get filled on some orders right here. And then we look for this to play out. Obviously, initial target's the back test of the 0.5. Then we have the, neckline of the head and shoulders. And then we have, obviously, our actual target, the 382. So that's what we're really looking for. 6% stop loss, 90% upside. Risk reward ratio, 15.21. That would be an absolute beautiful trade setup and one we would love to jump on. This is a nice trade setup. This is an amazing trade setup. This one could play out and we never get an opportunity for this one. This one could fail. Then this one could play out. Both of them could fail. We don't know what's going to happen. But if we flip a coin enough times and we're making 3-to-1 risk reward ratio or 10-to-1 or 5-to-1 or whatever, we're going to win. And that's all it is. Just, figuring out probable trade setups, looking at risk reward, appropriate position sizing, and then just shooting our shot, numbers game. So that is basic attention token. Then we have Chainlink. Chainlink has a very clear resistance here in red, a very clear support here in yellow, and we're basically just getting pinched between those. We also have a long-term, descending channel, 3 resistance touches right here. Not as clear on the bottom, but a couple pretty clear touches down here. And then we have a pretty clear heart line as well that we've interacted with quite a bit. So if we break out from here, we'll look at the heart line. If we get the macro to the top of the channel, that's the trade setup we have right here. Entry price is just where we're at right now. Obviously this looks very weak compared to a lot of other cryptos right now. But if we do get the 821 cross, if we do break out from that descending resistance, we're talking about 47% upside. We're talking about 8.5% stop loss if we go below any of these recent daily closes. So that's like $5.85 stop loss, $5.85. That's an 8.58% stop loss. That's an upside target of $9.46. Call it $9.50. 48. Call it 50% upside. Call it 9% downside. We're talking about a 5.5-to-1 risk reward ratio. Does this one fail? Is Chainlink dead? Is it garbage? Who knows? Who knows? It looks weaker leading up to this trade setup, but this trade setup looks pretty good. Now, Ethereum already had a nice little breakout. Ethereum's been in a sideways channel, just putting in the same lows, and then it was putting in the same highs, and then it just broke out, and now it's moving to the upside. So, do you want to bet on the horse that's winning the race, even though it's already in the lead, and the odds are less good? Or do you want to bet on the horse that, has a broken leg and is limping in the back, but the odds are really good? I don't know. That's up to you. There's a lot of horses to bet on. And, you could bet on, people bet on horses because of their names. They bet on horses because of their records. They bet on horses because of, what month it is, or astrology, or crystal ball, or psychic. You can make a legitimate argument for a bunch of different things, but the fact of the matter is you have to decide. Are you trying to, if we're in a bear market on an asset class, do you want to try to bet on the worst thing in a bear market? Or do you want to bet on the best thing in the bear market? That's up to you. I would say if you're going to go counter trend and you're going to bet on something in a bear market for a counter trend move, a bullish move, I would want to bet on the thing that people are interested in. What are people interested in? Whatever has momentum. What has momentum? Whatever people are buying. And then it builds more momentum. So for me, I'm trying to long the best of the worst, not long the worst of the worst. I'm not saying Chainlink is the worst of the worst, but this chart sucks. So then next we have Matic. So we can see Matic. What's the difference? Well, the 821 have already crossed the upside. We had like, sort of like descending kind of like resistance going on a couple different ways. We broke out from that resistance, whether it was like right here, whether we're looking at like right here and we're back testing that. There's a lot of different ways to look at it, but this chart obviously looks much better than something like Chainlink does. So people are paying attention to this. People are making gains on this already. So I think more people are likely to buy an asset in a bear market that's actually bullish, like it's moving bullishly, versus people that are like, oh, look at this ugly, horrible, terrible asset. What's XRP? This dead garbage crypto that no one wants, that looks absolutely atrocious, and it's just the absolute worst chart in all of crypto for everything that hasn't gone to zero. XRP, as an example, I mean, I'm just saying that. I'm not saying XRP is the worst crypto. There's other ones that are worse, but it's definitely at the bottom of the list or top of the list, depending on how you look at it. But that being said, do I want to bet on XRP right now? A dying crypto that relies on cult members in a dying cult? Or do I want to bet on some other crypto that at least has decent fundamentals, at least put in a new all-time high this cycle, at least has a semi-bullish chart, at least has a decent trade setup? I mean, that's up to you. Me, I don't like to buy, I don't like to bet on the horse when it's its last race before it gets turned into glue. So no thank you, XRP. No thank you, Dash. No thank you, OneCoin. No thank you, 2,000 other random cryptos that I've never even heard of. I'll stick to a couple decent ones. Obviously so far, the people that bet on Ethereum made the right bet. There might be other cryptos that are up more, but this was a very easy trade to take. Buy support, sell resistance, works, and then breakout. And why did we talk about the breakout in advance? Well, typically when you test the support 2 or 3 times, you're more likely to break. So we knew, hey, if we get a close at resistance, we're likely to get continuation. And then obviously if you were looking at a 4-hour or shorter time frame on Ethereum, it was very obvious that we were getting ready to have that breakout by momentum and how everything looked. So do we get the continuation? Do we get the completion of the trade setup and log that 76% and get that Ethereum 1863 target? We don't know, but so far so good. So that being said, that is it for our cryptos today. So now I talked about a little bit at the beginning of the stream. Remember, we have the FOMC meeting coming up on Wednesday of next week. Well, it's Tuesday and Wednesday. And then on Wednesday, Fed Powell gives a statement on everything. So expect big volatility on Wednesday. We're expecting 75 basis point hike. Maybe it's 100, possibly 50. I doubt it. But realistically, expect 75 basis points, and that's bad. So even if you're like, well, that's already priced into the market. So if we only get 75, that's good. Well, it's not. It's not good. It's horrible. It's terrible. And inflation's out of control. So that being said, you could say, well, good is bad and bad is good. 75 basis points is bad. So therefore, we're going to get good movement out of the markets. Look, I mean, that's all up to you or whatever. We know macro, when it's all said and done, a 75 basis point hike is good towards stopping inflation, but it's bad for markets because, monetary tightness is not going to make asset values go up. It's not going to help earnings. And then obviously we're going to see PE or price to sales coming down into the future, multiple contraction. So that being said, as long as inflation's out of control, we don't expect the Fed to pivot. As long as the Fed doesn't pivot, we don't expect the markets to be putting in new all-time highs. And as long as the markets are not going to be expected to be putting in new all-time highs, if we're trading with the trend, we should be trading bearish on most of these assets. So we'll see what happens. Still have, a full week now, and then one more weekend, and then, a couple days of the following week worth of sand left in our timer, slowly falling out. So there's still some time for these assets to run. And then obviously we'll see how the monthly closes. We'll see how this next week goes. We'll see how that rate hikes are. We'll see a lot more earnings, and then we can kind of go from there. But so far, it doesn't look good. Nothing really changing for me. I think we have a clear downtrend in most of these markets, and I don't see anything that tells me we're going to see a reversal on longer time frames. There's a couple markets trying to reclaim key levels, we'll pay attention to them. There's a couple of markets like energy retesting key levels. We'll pay attention to them. They should act as support and go higher. But we'll see. We'll see how everything goes, and we'll adapt according to what we see from the charts. Calma Betty says the laughy cry face. I know, I'm with you, man. That's how I look at like life at this point in time. It's like a sick joke, but honestly just hilarious. But that being said, we're going to go ahead and wrap it up there. Hopefully everybody enjoyed the stream. Make sure to like and subscribe. Obviously, you can catch us live every single Sunday for our 8 p.m. Eastern Standard Time stream for the Sunday market look ahead. And then we have our Wednesday midweek market update every Wednesday from 8 till 10 or 11. And then, of course, Fridays, we have our early stream, aka the 11 a.m. until 1 or 2 p.m. Friday weekly market wrap up. Talk about crypto a little more going into the weekend as well. So check us out for those live streams. If you want to become a group member, if you want access to the indicators, just send me an email and we can explain it from there. There's tons of other free indicators, tons of other free resources that I've provided to the community. So check those out regardless. But that is it for today. So we go and wrap it up there. Remember, none of this financial advice. I'm not your financial advisor. Markets are extremely volatile. Please do your own research and trade responsibly. It is Sunday at 10:30 p.m. Eastern Standard Time on 7/17/2022. I am, of course, Crypto Trend Trader, and I am out of here. Everybody have a great week. I will see you guys in the group, and this is going to be a good 1, 2, 3 weeks coming up here, guys. Tons and tons of opportunity. Going to be some beautiful trade setups. There's going to be a lot of money made and lost. Most important thing, preserve our principal, protect our capital, and then lock in those gains. Because we could easily see big gains and big losses, or big losses and big gains. Most important thing is to protect our accounts and to lock in those gains to make sure we get to keep playing the game. Because the longer we play for and the better decisions we make, more likely we are to succeed in the long run. So that's it for today, Crypto Trend Trader. Everybody have a great night, and I'll see you guys